I have a little baby short on here in the micros just for fun because it looked like it ran out of gas up here, and NFP is coming, and I can't imagine a lot of people like ripping long positions ahead of NFP or short positions for that matter. So we should just go back into the range. So that is the trade you see on in my ES window on the far right. And again, it's just I do little just warm up trades, the best way to describe it. I do that every morning, and I do it with real money. I don't do it with sim, and I just trying to get a read. And the read's been a long all morning, and I scalped a few longs, but now I'm kind of again NFPs in 15 minutes or 18 minutes. This has to be buying to sell, but it certainly could go farther. So we aren't really moving much. We're up 10 points in ES. That's a very typical spot that it would, fill immediately on a gap if it opened here. But of course, we're still going up. So anyway, I'm short here from right around 86.25. I've got to stop at 88.5, and just because that's the top of the range, if it goes through that, then we'll probably go up in the 90s somewhere. And again, this isn't any genius setup. I'm just surprised to see buying ahead of NFP. So I figured I'd fade it because that's how my brain works. Everybody else must be wrong. So that's where the ideas come from. And sometimes they work, sometimes they don't. But this is a very interesting spot. We're building a high volume node right here. So I'm kind of enjoying my little test short. It's actually been in profit a few times, but not by more than a few ticks. And the idea here is to get back down to the bottom of the range or into the middle of the range, like maybe, let's see, that would be a good spot there. So, this high volume node, not the one we're making, but again, this could be wrong and we could blow up in here really fast. It's early, the volume's low. And yeah, it looks like that's about to happen. Boom, we got taken out. So yeah, I put that stop right at the edge of the range just because I wanted to see, if it blew through it or not. And it just tapped it. But again, it's still upside energy. So that's how I warm my brain up. I just kind of play around with ideas with very little money, $5 at a time, whatever. Just get the brain thinking in terms of risk and momentum and inflection points and direction and all the stuff we need our brains to be doing. Let's see. I do have chat enabled. I think I've only got it enabled to me.
Yes, it is set to hosts and co-hosts only.
Okay, so you're seeing it too, right?
Yep.
Okay, good. So I have a question. Springs and upthrust video is all. Oh, thank you. Okay, just a nice comment. Appreciate it. Yeah, springs and upthrust. This is a fun topic. Real quickly, I'll give you 2 seconds on it. So I had coffee with David Weiss back before he passed away a while ago. I don't know, 5 years ago, 8 years ago. And he wrote Trade's About to Happen. He's a kind of Wyckoffean expert, and really good book, by the way. I recommend it. And one of the things he says in the books is that you can make a living just trading springs and upthrusts on a 5-minute chart. And I totally agree with that, except I would use like a little bit faster chart than that. 5 minutes is kind of a good reference time frame, but for futures, I would probably do a little faster, 1 minute, 2 minute, 3 minute. But that's a totally legitimate trading strategy. Just springs and upthrusts. You can do that. It's like trading the open 5 with with momentum. It's one of those things that it stands alone. You don't have to do anything else. This is it right here in this window to the left of my indexes. You can see the wave volume on there. You can see the range. This one's set for 60 seconds, but you'll see what I mean. If you take these to 5 minutes, they are really visual. And, it's really easy to figure out where entries should be and where they shouldn't be, So ebb and flow range, and this is the high of the initial balance high from yesterday, I think. And so you can see right here is when the momentum shifted up, and now it's getting really aggressive at the highs. So that's a spring. We sprung out of these highs right here at 80, and now we're at 87. There's absolutely no question. I mean, it's one of my favorite setups, but I tend to only pay attention to springs and upthrusts, as I mentioned, if the market's trending, because that, then it's a really good tool to get a good entry. Like in this move, look at this move here from 60 to 88. Okay. If you did nothing but buy the low volume pullbacks, you would have had you would have no losing trades. So again, that only works when the market's directional, trending over some period of time. But it is a really, really good tactic. I love it. And it's funny. I asked him, I've said this before. I asked him when we were talking, so How come you don't, why don't you just sell a book on springs and upthrust? And that's not how books work, unfortunately. But you should think about that in terms of trading books, because there's always a nugget like that in any successful trader's book where, and he says that you can make a living just trading 5-minute springs and upthrusts. And I totally agree. And that's probably the best nugget in his book, in my opinion, at least for new people. There's other stuff in there that goes too deep into Wyckofian theory, and I don't use it that far, accumulation and distribution and, where it is in the pattern and all that nonsense. That's too much to think about from my simplistic point of view. Okay, so well, we got some good diehards here for the morning. NFP is in 10, 13 minutes. The indexes have been in an up move, but they're kind of, all sitting at the near the highs. Who's leading? NQ as usual, if you sort by percentage change, and then RTY. So this is a normal up move behavior when NQ and RTY are leading and YM's at the other end. This is a broad move, but equities aren't open yet. So basically what the market's telling us right now is people trading large quantities of futures and small quantities of futures, but obviously the larger quantities are what's moving the price. They generally are, buying here at the, at break even from yesterday or better on very low volume, and they're doing it across all the indexes. So that kind of, before NFP, that's, not including NFP, in other words, that's basically just predicting that we're going to have a slight up day or a range day, and they might be doing this to sell into it. That's why I was shorting it earlier, because a lot of times you'll see energy like this before an economic announcement, because people are trying to either put on shorts or get positions off. Maybe they have longs from earlier in this trend move, who knows? But I think the energy is going to go to the downside, at least between now and NFP. But as you saw, I was short. I got stopped out. I'm not going to try it again down here, because now it's almost down to the target that I was originally going for. And that's just the nature of this time of day. That's why I never place big bets in the pre-market, and as I said, it's a really good way to warm up and get your brain working, but I wouldn't ever overcommit. 1 micro is a perfect number to play around with this and, invest $20 in getting your brain warmed up. Having said that, so here's the schedule. We have NFP at 5:30. We're going to do the CL A period, oil A period at 6. Between 5:30 and 6, we'll just see what's happening based on NFP's numbers. And then ES A period is at 6:30. That's also B period for oil. So I may trade either of those, all of those, we'll see. We'll probably stay on this screen so I can see everything at once. And this pretty much tells me anything I need to do to execute either an oil on the left or the indexes on the right. But again, it's really important you keep in mind that I have all of my contextual information on the other 2 monitors. I'm seeing TPOs, I'm seeing very fast 15-second footprints. I'm seeing the 30-minute footprints that are showing structure. For example, right now, there's a price rejector on the pullback going on over there. You can see it right there, holding that low. So all of that is what I'm deciding, what I'm making my discretionary decisions based on. But you're seeing the place I execute, which is on this main monitor. I can see instantaneous correlation either on my 15 seconds or on the domes themselves. I get a little bit of context by running a slightly slower chart. This is a 60-second at the moment. And again, I've got that on my other screen, but that way I don't have to turn my head and screw up my already screwed up neck. Look at this right here. We are right at the bottom of the range on that, pushing it a little bit on the fastest one, the 15-second, but there's no strong delta down there. This is how we got up there, that big strong delta. Now it's sitting right here on a low volume pullback. This is actually the setup that I was short for before, when I was short from up here, but obviously I got stopped out. So, again, I'm doing that in micros, not because I'm trying to make money. I'm just trying to kind of get my brain, am I seeing what's going on? And that tells me I saw exactly what was going on. I just, couldn't execute against it, but it's too thin to execute against anything right now. It's moving around too much, even within a good idea. And that's the point. All right, 9 more minutes. Oh, awesome. Welcome, Summer. Summer just Again, not everyone can see all the messages. We've got it going to the host and co-host, but Summer just wrote a very nice message. Yeah, we haven't seen you in a meeting in a while. So cool. And this is going to be a fun one. And we're going to get, I'm going to have to really work to pace myself here because, I started at 5:15 and this will probably go to at least 7 my time, maybe 7:30 if we have some exciting stuff to trade. And then I've got the closing session again at noon. We will do one today because, again, I think it's going to be a good close. It's been a busy week, and Friday closes on busy weeks are either really dead and you can scalp with size, or they're really active and you can, play the extremes. So that's the reason I want to trade the close today. I just can't imagine anybody taking home a lot of positions this weekend. There's just too many things going on that, could change the world. Once again, volatility's way up. Oh, by the way, if you're watching the VIX, that's kind of my shorthand. Are we risk on, risk off? And the VIX futures they were as high as 27 earlier. They're 25.8 right now, but that's way off the 16 they were at 2 weeks ago. So that implies risk off, or at least heading to risk off. We had an impromptu hedge fund call today. We do that every now and then, and I initiated it because I wanted to throw them a curve. So I just basically asked these guys, how many people, and we had a small turnout, but I asked them, how many of you think that this move up that we're seeing right now is, quote unquote, being engineered for larger positions to be unwound? And the response was unanimously interesting, that they don't even say that they think it's being engineered. They think everybody is unwinding into any move up. And I mean, it was a chorus unanimous on that. But, what's a move up? It could be another all-time high. Everything's always relative. But I thought that was very interesting. And again, it's consistent with the, everyone's got a record year and their bonuses are going to be enormous. And, why take chances between now going into the holidays? So I don't think everybody's going to go to cash, but I certainly think the potential for a lot of unwinding is there. So particularly since if you look at the TPO view, the market certainly has held the recent lows, and it's trying to consolidate down there, but this is not pretty. This is not what normal pullbacks look like. They look like this up here, and then they go to new all-time highs. But, this is consolidated and collapsed through the consolidations 3 times. First consolidation was here. We blew through that one. We did another one. These are basically ebb and flows over days, right? Then we took that one out, and now we had a lower low. We're trying to come back up, but it's not doing it with a lot of energy. So that's kind of another way to, we could easily go into the holidays and hit all-time highs, but it doesn't feel like that's what's happening on the tape. It feels like people are using moves up to take profits, and they are buying the dips, but they're day trading the dips. I don't think the equities aren't keeping up. That's another thing. If I show you guys the up volume, down volume, that's very interesting. Again, I'm just kind of slipping it into the corner of so I don't have to turn off all my always on tops. So this was that big, massive down volume we had on the biggest drop day we've had so far. And then it was followed by a day of big down volume. Yesterday, we had good up volume, but relative to all this down volume, we're not even covering a day's worth of it. So again, it's just contextual kind of perspective on, if you look at the money in massive amounts of movement, that's what it looks like. And that's not a bullish picture. It's people are selling into highs and scalping lows picture. That's what it's saying. So we'll see. Anyway, NFP is a news NEWZ event. News events, these are shocks to the system. If anything is off, we'll go one way or the other really aggressively. The trick to trading this is as follows. If you're new, you don't trade it. This is not tradable for amateurs. If you have some experience and you're reasonably confident and you're reasonably good at getting out of your own way when you're wrong, the trick to this type of news announcement is to play the extremes. Let's say the news comes out and it's just, the immediate reaction is to go up to 90 or 4,600. That's a really interesting big giant move. And I'm not going to go with that, but I'm going to look to see, is it fadeable? Can I sell into that move? If it's just a shock and people start selling it, you can catch just wicked turns. The high volume reversals of the year happen on those kinds of setups. Likewise, we could go down into a buying zone somewhere and see it work the other way. But you don't want to respond to momentum, because on news-based events, momentum can shift back and forth a lot. People are adjusting strategies on really big portfolios. And, if you have less than 50 years of trading experience, your best bet is to sit on the sidelines. If you have more than 5 or so, you might want to play around in the sim with extremes. It's fun to play with, but another big warning about this: do not result from whatever happens. If you happen to catch the extreme and you make $1 million on one trade because you got lucky, is what happened. You're not a genius trader. Don't conclude from the results the quality of your decisions. Catching extremes is, they're black swan events. If you can make money with them, by capitalizing on the fact that they're asymmetric, they're skewed one way, then you do it. And the trick to those is to fade them. We could have a big gap, on a positive NFP, and that's either something you fade or nothing. You don't join momentum like that. Certainly not between the news announcement and 5:30 and the open. Maybe after the open that will be joinable momentum. But so the opportunities at the extremes are fades of either end. Buy the bottom, sell the top. But don't think if we gap up to 4,600, you should suddenly jump long an hour before the open. That's really, really stupid. You're at the wrong end of the short squeeze. So hopefully all that makes sense. By the way, feel free to put comments, in the chat. I will respond to them, but I'm not watching this closely in a normal session. I think I'm doing my live sessions under the new format the most like classes of any of the three of us. I think that's true, but that's just my style. It's not, I'm going to try to trade and just talk what I'm thinking, but if I can make an educational idea out of it, I always try to do that. That's just my way. So, yeah, Amy said it's a lotto ticket. Yeah, exactly. That's totally what it is. You're buying a very low cost idea that might make a lot of money, but number one, you don't let it lose a lot of money. You use some very short fixed stop on something like that. In my case with ES, I would use 10 ticks. So, I might risk, $6 or $60 or $70, or if I got swept, maybe $80, worst case 100, so if you're going to do this and I wouldn't do it with a mini, but if you did, maybe you're risking $100 with that stop, and you've got potential all the way the other way. I mean, the range overnight is decent. It wasn't huge. It's usually a little bigger lately, but we have in ES we have a 45-point overnight range. So just a push up that goes to the middle or the other end of the range is a wicked good trade. So anyway, but you have to be nimble, and I do it in micros. Think of them as lottery tickets. The MISO idea. Use them as options. So if I can buy an option at 4,600. By putting on a micro and giving it, a $20 stop or something that we're going to go back down, that's a really good bet. Why not? Thinking in bets. Okay, the numbers are out. You can see we are in price discovery. Look at this. Just, momentum in both directions. There's no bids or asks. Look at this. Even on ES, there's prices that have no offer or a bid, and there's some places that only have single digits. So this is not tradable. It's simply not tradable. Even with a micro, I won't try it, because it's just way too thin. You can be right and not make any money because you can't get out of your right trade, because then it goes the other way. So yeah, look at this. We are sweeping up and down at the moment 12 ticks, now 16 ticks. Literally just not tradable. So just learn, watch price discovery and say, oh, isn't this cool? Back in my generation, we'd sit around and drop acid and watch this. I'm kidding, but I'm a little bit younger than that, but I'm close. Are the springs and upthrusts reliable on overnight trends? They're actually more reliable overnight, Felipe, because there's no outside influences. It's pure technical stuff. So yes, absolutely. I love to do that. If there's an overnight trending move, I will join a weak pullback all day long. Like you see here, that was going on this morning. All you had to do was buy the weak pullbacks in ES and keep your stop tight. And those were profitable trades. Okay, so we are going up. This is the scenario that I expected. Something in NFP that pushes us up, but not enough that I would join it long. So it looks like we might get, here's big fat hole number up here. That's 4,600. And we're not there yet, but if we start getting up there, I may fade this. I'm not going to fade it here. It's still going up. The key to scalping correctly is to understand which way are we going, how aggressively are we going that way, and is it changing? If you can answer those three questions, you can scalp as a master, but you have to constantly be asking yourself those questions. So right now, direction's up. Momentum is strong, but but it's not just up, it's both ways. So that right there, not tradable. Sweeps in both directions, not tradable. So we're automatically sit on our hands because of that criteria, but the rest of the scalping model is in play. Direction up, momentum strong. It's not changing to the downside. It's getting stronger up. So you could theoretically be long here, but I wouldn't, just because you can't manage your profits. There will be better risk reward opportunities when this is over, higher up somewhere, or when it diminishes its energy, and the energy is not diminishing. Just look at this is why I like equivolume views on Ninja. See how just really obvious that the volume is not going down. Look at the deltas, and equivolume is the width of the bar is the volume. So the wider the bar, the more volume, and volume's picking up. So again, not tradable in my opinion. Potentially a short up here at some point. I'm not going to do it yet. We've been as high as 2. That might have been the sweet spot to short right there, but it's still moving around a little too much. I wouldn't really risk it here, but I'm thinking actually now I might risk it. Hold on a minute. And I don't know. I think we still got up to go. Yeah, if we can get up. So 2, the next quarter from 2 is 2.5. So that spot right there is really interesting. And we've already been up there. So if we got up again and didn't get a lot of energy just above double zero, I'd probably hit the market and fade this. So that's kind of what I'm thinking. I don't want to fade it here because where am I wrong? Well, at 3. So, you can't, it's too far away from any benchmark. And again, if you're long and you haven't taken profits, you're risking this entire chunk below just being, we could sweep down there in a second, and then, you won't be able to get out of your long. So that's at least that's what I do. I would have taken profits if I happened to catch this low. And there's the sweep down that will take you out. So, and there's another one. So yeah, you don't want to be long here. No. This is a potential short fade, but we need a higher place to do it, Jeffrey. This is me talking to myself. See now that the liquidity provider is now up at 1. He was down at double zero a minute. He's moving around a lot. This is the bottom end, same trader. They're being paid to do this. So it's not, don't think of it as supply and demand. Just think of it as the boundaries of the range right now are pretty much where those guys are. That's literally, they're being paid to do that. We've talked about this in other sessions. Liquidity providers is what they're called. They're only in the micros, and they're paid by the CME to put those bids or offers up to keep the market roughly in sync with the mini. That's the purpose of that. So again, they're always fun to watch because they give you a really good idea of what the current range is, and they don't want to be filled. So they'll move away as we head down toward them or up toward them. But how far they are from the current inside bid and ask is always interesting. It's like right now, they're closer to the bid on the buy side. So they still think we're going up, and there we go. So interesting. Again, it's not a tradable edge, but it's fun to watch where they are. And you should see them confirming what you're thinking. It's like right now we're going into an area that's going to get bought is kind of what I'm seeing there. And that's exactly what's happening. So he's holding at 96.87. So they're perfect 10-point range. And we're closer to the bottom of that range than the top right now. So it's not like the bottom's going to fall out here at the moment. But I would not be long. A long back down at this bulge is interesting if that gets there and holds. The bulge being like 87.5. The next that quarter down. I love the quarters. It's an old thing in ES. It's been around since it was the SP contract. The quarters being even numbers like 0, 0, and then 2.5, 5, 7.5, and then 0, 0 again. That is what the quarters are. For some reason, ES just likes to, they're not inflection points, but think of them as barometers of a move. If it goes through 95, it's probably going to get to 97.5. And if it goes down through 92.5, it's probably going to get to 90. That's generally how you use it. That's how floor traders used it for decades. And there it goes again, boom. So yes, there's definitely a bid under the market, but it's not at the inside. Whoa, look at that. We just had, that was a 12 tick sweep that got bought. It swept down and got bought in the same motion. That was probably an algorithm of some kind that was trying to get a fill down there. That's how they do that. They sell to buy. We've talked about this, Lee and JVC and I, over and over again. Anyway, really fun action to watch, but nobody with really good brain cells is going to try to trade this. It is doing something else for us, though, and this is what I do at this time of the day with NFP-like days. It's giving us information about the thinking of traders going into the open. And, given whatever NFP was, and I haven't even looked, I don't care. It's the response to it or the reaction to it that matters. It's a bullish reaction. It's not a very good one. We were up 10, now we're up 20. So, is this an opportunity to sell into it? Yeah, but you got to get a good entry. Right now, a good entry is somewhere between 1 and 2. And assuming the 2.5 holds. So that's the idea to short up here. If I were to get that set up in the next 40 minutes before we get to the open, I would definitely take it because it's just really easy to manage risk up there. I mean, I'm wrong or I'm right away. And again, I wouldn't do that with a mini so fast, just because the potential for getting run over could cost you a lot of money quickly. But with a micro, you can keep risk to $10, $20 and have 300-400 of potential the other direction, and that's worth doing. It's easy. That's the kind of trade you can leave on all day while you're doing other stuff. As long as it doesn't take your stop out. And I like to do that sometimes in micros, and then go into the ES, the mini, and scalp there, with 1 or 2 lots for ticks, and that way you end up, making your main money scalping, and then if you happen to catch the right end of the range with the micro, it doubles your earnings for the day without any additional effort. But right now, as you can see, we're building a really nice high volume node up here at 95, and that's what makes this impossible to trade, because above that it's a wicked long. Below it, it's not a short because there's a bid under it, but it's not managing to get above that. That's why it's beautiful little high volume node formed right there as we've been talking. And the next one down is all the way down here at 87.5. So, this is just way too big an air pocket that we could just fly down through and get filled and go right back up. And, you can see there's a little bit of size there at 90, and the liquidity guy is also at 90. There's a buyer at 91.5. So, yeah. No, but again, really good information to understand what we're going to see at the open, but nothing I want to trade yet. And I'm going to leave my footprint here. I've reset it a few times. I'm just going to reset the current trades, and I'm going to leave my total trades and let it build me a footprint right on this high volume node, because right now that's what's in play. Hopefully you see that. That is the inflection point of the moment right there. And we're trading below it, but there's definitely a bid down here at like 90, 91, because every time we go down there on a sweep or any other way, we sweep right back up. So that's the top of the range right now. And it looks like it's pretty balanced there. The buying and selling was pretty balanced, and there's a lot of liquidity right there. So right now, the roof is 95. A spurt to 97.5 wouldn't surprise me, because that's kind of where it gets thin. But if it gets above that, it's going to rock and roll. But anywhere, that makes the short idea solid if it can stay under 98. So, another squirt up, I would short. A weak move up to 97.5, I would probably nibble at if it stayed weak, but I'd be cautious there, because that's a spot you could get swept up to all-time highs again, or to session highs. You're vulnerable at that spot because you're above the high volume node, and it's thin above you. Thinness is always vulnerability. The market likes to move quickly through thin volume profile areas, low volume nodes, simply because not a lot has happened. So, a seller can push us down through it really quickly. Buyers can push us up through it. So, until the volume fills in, that area is always going to be a significant risk. And likewise, above this high volume node up this way is a risk to go that way on a sweep, because there hasn't been enough energy up there for anybody to really commit. And, you can always go over and look at the max delta and min delta and get kind of the same information. I'm doing that right now, actually. So max delta is all the way up at 4,600, and min delta is at the moment 90.50. So there's the range, and literally we're watching that range trade. So one of the things that in the new material we're developing that JVC and Lee and I, whatever your time frame is, it really doesn't matter. It's always about the range. Whether it's the 30-minute range or the min max delta range, or it's the LRC range, or it's the high volume node range. Ranges are the golden information, because in order to leave a range, the market needs new information, right? I mean, that's just common sense. Otherwise, it's going to stay in the range. So big delta hitting, big sell, big buy, those are the kind of things that will change the range, because that's new information to the trade. And right now, the bottom of the range is holding. We are right on min delta. We just went below it over on the 30-minute footprint, and there's a price rejector forming on the pullback there. So this is a very important spot right now. It should hold, but I'm guessing that the rest of my my short trade here that I stopped out of which now would be 7 points in profit. So, that's the thing. You can't think that way. I giggle about it because, you're seeing if you're seeing the market correctly, and you have a little trade like that that doesn't make money, then the market isn't really tradable at the moment. But you're reading it right, and that you should be happy with that, and just wait for better opportunity. Wait for the ace king setup. But yeah, it's selling into the open now, which is what I expected. Where I'd expect it to hold is where it was overnight, at least, or that was when it was up 10. And so that would be, 4 points more down, 87.5. Which happens to be the top of that big high volume node. How about that? It's funny how that works. Okay. Yeah, Amy is agreeing with me on the micro strategy. Yeah, we both do that. And that's one reason, by the way, guys, I have the micros right next to the minis like this. So I can do two trades like that with two different sets of tactics and, and not get distracted by one or the other. It's really clear which one's the micro. I don't care about the volume over there. I'm watching the volume of the mini and the footprint of the mini and all of the LTQ of the mini. The mini is what matters. And then just playing the micro is just a lower risk, slightly more expensive way commission wise to play. And it's a good thing to default to. 5 minis or 5 micros is one mini or is one half a mini. That's perfect. You cut your risk by half by using 5 instead of 1. 5 little ones, 1 big one. That's 50% less risk. So, always think in terms of risk. That's I've been having some conversations with a couple of people, and there's one piece of it I really want to repeat right now, because to people that are in the market actively and understand it, this is obvious, but it stuns me when I repeatedly learn by just chatting with people, and this happened yesterday, that this isn't obvious. So, while we're just waiting to see how this settles down, I do not know, let me be really clear about this. I do not know a single individual trader that is successful, that is not a discretionary trader. I don't know any automated system tool type traders that make money. I literally don't. In a trending market, a tool that follows trends will make money, but it won't when the market stops trending, et cetera, et cetera. Every professional trader I know is a discretionary trader. Literally, I do not know one that is not. But that doesn't mean they don't use tools. They use visualization tools. They use order entry and execution tools. That's what they automate. But the decisions are all purely human to turn those tools on, or when to use those tools, or when to use what tactics and strategies. And it's really important if you're new to trading the futures market that you understand that. There are no magic black box things you can buy that you just turn on and they make money. Likewise, learning how to trade, you have to understand that it's always just simply comes down to thinking in probabilities about certain types of events that will follow some type of probability behavior. This is my little reminder for my morning ritual. When I don't have NFP, I started a little later. And that's just a exercise and meditation thing, and I already did it today. So again, that's before I sit at my desk. I kind of unkink my old body and I meditate for half an hour or so and just try to get my shit together, which can be tricky. Mornings are painful for me, but it's a good thing, no matter what your life is like. It's funny, I'm a really late night person, but I'm really productive when I get up early. So managing that is tricky. I can stay up really late and then I'll be too tired early in the morning. So last night I went to bed at 8 and slept till about 2 a.m. and that was perfect. But different days, different things. So look at this. Now we're back at 92. So, what I've been saying, there's definitely a bit under the market, that's between 87 and 90, and it's the bottom of the range. And, now we're back up at plus 17. We kind of tease down to what it was like before the NFP announcement, but basically the market has a bullish stance going into the open. It's not a very good one. It's 0.5%. That odds are that means we're going to have an inside day or a range day. If that continues, which is great. Range days, we make a lot of money because it's predictable. We can trade size. So that's kind of what I'm thinking right now. I'm thinking I don't want to do anything until I see how the equities open. And so I'm going to turn my attention to oil, which is over here on the left. Again, just a quick 60-second to see what it's doing. It teased up to an area that I posted about this morning. There's a weak/poor kind of high right above us. This is oil. It's right there. And so, just before 69, on the way to 69, and we're trading 68.47. And so far, pushes up in oil have been sold, but it's a really tight range. Nothing like we've seen lately. Oil's what the range is. It's 3 points. So we've not a lot of movement. 2%, 3%. It's right at 3% right now. For oil, we had 13% day recently. We've had 5-6% moves. So that's relatively quiet. So if it can take out that high, that might be an interesting place to look short in oil. And so that would be, we have to take out the session high. So depending on what A period is, if A to overnight is heading up, the long idea here is very interesting in oil. So I don't know what JVC is doing in his oil thinking, but I wonder if he's thinking similarly. Feel free to comment.
I am actually thinking in code at the moment. So.
Okay, so this is what the 30 minutes look like. There's some zero prints below us, but there's some zero prints above us. And let me scoot this over just a bit. You can see the session high is right there at 75, and that poor weak high is between that and 69, between 68.75 and 69. And again, the quarters work that way too, but they don't work on oil nearly as well as they do on ES. ES has just, I think, been in the quarter world for so long that it works better. So anyway, I like that idea. I like a long up to that. If we could get a spot right when it opens to get a decent long. And then when it gets up there, I would probably be thinking maybe to go the other way. So that's an interesting setup for what this. Oh, Zoom is blinking my windows. Just make sure I'm on the accounts I want to do this in. Okay. So meanwhile, what's going on over here? Wow, the bottom fell out of the equities. So once again, my idea that they were going to push it up to sell it is looking like it's happening. But boy, that would just be it. And look at that back and forth motion there. That would have been really, really hard to stay with. So anywho. All right, I'm getting some Zoom lag at my end. Are you guys seeing that, JVC?
Let me get your screen full screen so I can see something like that.
Okay, Amy says no lags. Yeah.
Are you talking about DOM lag or mouse
no?
lag?
It keeps blinking like my trade windows on and off at my end. It's weird. It's not doing it now. So maybe it. You know what? I might close Thinkorswim. I really don't need it. Let me just take one last look at the. I do want to see the internals after we open, but that's not for an hour. All right. You know what I'm going to do? I'm going to just clear out the garbage. Java apps. There's actually a button in Thinkorswim called Collect Garbage. Right now, it's using 500. It's using half a gig of memory. I pressed that button, and now it's using 100K of memory. Talk about ancient apps. Wow, that's pretty funny. Anyway. All right, so not a lot going to happen between now and A period. Oil, which is in about 10 more minutes. I'm watching the indexes, and again, the short trade is over. It worked ultimately, but it would have been really hard to stay in, even though it looks really clean here on this low 1 minute view. It looks like a clean top, but remember that was moving around wicked in there, so risk management would have been nearly impossible. You would have just had to commit to the idea, which at the moment, the bid that was under us is kind of gone. We're right back smack dab of the high volume node, which is where I expected us to be before the open. So I don't have anything to add to the quality of this. Look at this. Now we're below 10. So remember I said we were up 10 before the announcement. Now we're only up 8. So basically that entire 20 or 10 point bounce from NFP has now retraced. So that if you can manage risk, fading news like that is always a good trade. I love doing it, but today was an example where it was just a little bit too crazy to try to do it too thin. Okay, let's see. I have a question. I see fairly easily now where I should have an extra MICO on to catch more than 4-point scalp taken in Q, but that extra MICO, even when it's winning, throws your mind off track scalping. Yeah, absolutely. Summer is saying, it's really hard to sometimes do those two things. And I totally agree with that. And I think you're much better off if you're going to leave a micro to do that in ES instead of NQ, because NQ can just move around so much. So if I were you, I would continue to do what you're doing well in NQ. And if you like the idea of the leave a micro trade on, do it in good reference points in ES. Because your NQ trading should be following the structure of ES anyway, if you're doing it well. So Good. Okay, that makes sense. I'm getting good. Okay, cool. Yeah, Amy just said, it took her 3 to 4 months practicing to get competent at doing that. Yeah, I find there's times I can do it, and then there's just days that my brain just not capable of thinking in two things at once. And as I've gotten older, I have pretty high energy for my age, as you guys all know. So it's been less of an impact, but I'm seeing it in a lot of my friends. A couple of my friends are a little older than me, and they're paring down, the number of setups, and I think that's just good advice anyway. But certainly when your brain is either older or there's more going on in your life, or it. But after, on the day, it's funny, Summer and Amy and everyone else, on the days it works, that you can get into that mode and, okay, that was an extreme. I'll throw a micro on and I won't worry about it as long as we don't get back up there. And then I'm going to go scalp the minis based on the tape, and then the next thing, you glance over at your micro and you've got, an extra $200 over there. And that's the way to do it. You should just literally only do it in a place you don't have to pay attention. Like what I was saying, if I had kept my short, which I took off at 87, right? If that hadn't have, broken down more, that would have given me a really good opportunity. But I couldn't manage risk, and that always has to be. Look, your sequence of events in your brain should be the following: is there a setup that I can game right now? Is there some event going on in the market that I can assign probabilities to? If there isn't, then sit on your hands. Okay, so, and usually that we can see, probable events. There's usually plenty of those. The next question is, can I risk manage around those? And is the volatility of the price action allow me to execute that trade? A lot of times there's wicked good momentum trades in NQ, but it's going both directions enough that unless you get a really good entry, you can be right and still lose money in NQ. So that's why I over and over I say you got to let it come to you. You got to pick out a spot and just be patient there. And when it gets to you, go or no go, and then that's how you make money in NQ. Because then you're getting an entry at the point where it's not likely to go against you, or if it does, it's really obvious. So once you've got that picture in your brain, okay, I see setups, I see the probabilities, risk is manageable or risk is not manageable, then you put your trade on, and your entire focus should be nothing but managing risk. Nothing else matters once you press that button and you're in the market. Because making money is easy when you have good setups. The place we screw up is we overcommit when we're losing money. Everybody does the same thing, and so the trick is just to be really good at being wrong. Either where are you wrong on the chart or on the price, and just when it gets there, you're gone. I prefer to do it with the flat button than mechanical stops. I will use mechanical stops where they're logical. For example, the one I got stopped out, I put that on 3 ticks before the high of the session, because I knew if we got back up there, the high of the session was probably going to go. I got stopped out, it pulled back, and then it took out the high of the session and protected me from like another 10 ticks of sweep loss. So that's why I do that. But only when there's a really good engineered spot where that's really obvious, like in an extreme fade of NFP. But when it's just moving around like it is now and I'm just scalping, I have a catastrophic stop on only, and every now and then I put my trade on and immediately hits that. And I think on ES, my cat stop is now 6 ticks. If I go into a trade and it immediately goes against me 6 ticks, then I don't want to be in it anyway. But once I get in, I will usually move that away so I can watch the action and then use the flat button as my stop. You guys see me do that over and over again. You'll hear me literally say that. Let's get these out of the way, because I don't want to see mechanical stops. I want to see the price action and make decisions based on that. So. Okay. Oh, I've noticed on NFP that many times we return and reverse back to, yeah, we do it all the time. We just did it, David. That is exactly what happened. I tried to short it, and the trick was getting an entry at the right spot. I didn't try to short the absolute top. I was already in it beforehand and then decided not to play. And so, but yeah, absolutely. That was playable if you got the right entry. You couldn't have put a sell order up there to start with because you didn't know where it was going to get to. So, if you go back and look at that move to 2, here it is on my 60-second. It was that wick right there. And I would submit to you there was probably a lot of limit orders up there that ultimately got filled. So getting an entry anywhere near there, unless you already had a limit sell up there, would have been pretty hard. Or stop entry. Even a stop entry might not have got you in the trade at a good spot. But yeah, that was a totally workable trade. No, I would not. No. Why would you get long here? Because there was a follow-up question. Would you get long returning to 84? not during the pre-market, because you're trying to trade a pattern that doesn't exist, David. The event was caused by NFP. And that's how we shot up there. So you're inferring that means that there's demand down there, and there was demand at 90, but why would there be demand necessarily at 84? Don't read structure into the pre-market before we open. That's my point. It's not just a pattern for NFP, David. It's a pattern for any news announcement that is significant. They all do that. They all push extremes, and that's why I say, when we're trading the news announcements, whether it's FOMC or it's NFP or it's, pick an announcement, those are always trades to fade. And if they're occurring during the trading day when they come back into the range, then it makes lots of sense to play them. But you can't say that there's a pattern for NFP, David, because NFP occurs once a month. Which David is this, by the way? I'm just, please tell me which one. Oh, Dave Wang. Okay, good. So you can't tell me there's a pattern there because, yeah, you may have seen it and there's anecdotal evidence in your mind that it does a certain thing, but there's only 12 NFPs a year. So, and 12 of something isn't a pattern, So if you go back and you did a study, okay, NFP over the last 25 years, and that pattern was there every single time or 80% of the time, then we can have a conversation about it's a gameable edge. But not when you say, yeah, I've noticed it do that. This is a huge error that new traders make. Okay, the next question is, have I looked at it? Okay. I've traded NFP for as long as there's been NFP and I've been alive. And I always do it the same way because the only safe way to trade any news announcement before we have regular trading is to fade its extremes. And if it is a truly solid move, and this is not, a gap up in ES of less than 20 is a rounding error when you're at 45.94. I mean, it's less than 0.5%. So any pattern you could imply from that is not a pattern. You are seeing the normal nature of the market. I mean, if you think you've done it, what I would encourage you to do, go back and look at all 12 NFPs this year or the last 12 months. Plot every single one of them. Is that pattern there and every one of them at a definable point? You tell me. I would submit that it isn't. You might think you're seeing it, but again, prove me wrong. I'm happy to be wrong. People occasionally find new edges like that. That one, I doubt, is a real legitimate edge because of the way news trades work. There are funds that just fade news trades. That's their entire business model, to short those highs and buy those lows. And so they're I wouldn't say they're manipulating it, but the energy that they bring to it can cause aberrations to the statistical outcome. Does that make sense what I just said? Do you understand what I just said? Think about that. Okay, let's continue. Oil's about to open. It just did, actually. So remember what I was saying here, I might want to be long. Boy, look at that sweep down. So that might be actually sweeping down to a good spot to buy. See where we're at right here? So again, there's weak right above us, but I don't want to buy a lot of weakness. I want to buy weakness that holds. So I might nibble here, but these downside sweeps are a little scary. We're at the bottom of the range. This is a decent spot to try to nibble if it holds that range. And I'm right that it's going to go up. Let's try one here and see what happens. So I just took a micro. We'll use that as a stop. That's, I think, 10 ticks. So it'll work or it won't. And I'm thinking the other end of the ledge is going to go here. That's the top of the range. And we're about to get stopped out. Yeah, it's just a little too volatile for this to work. So we took out the bottom of the short-term range. So now that kind of idea is over. It's going down more aggressively than up. So the idea that it's going to, at the moment, go after that weak high, I'm not seeing. But again, if you're watching the footprint on the 30-minute, I am on my left screen. We're at an area that it kind of bounced off, and there's a little bit of a price rejector there from earlier in the morning, but it's not real solid. So again, I still like this idea, but can I manage risk? Okay, now there's some buying coming in right there. You can see the delta rolled over for a second, and now it's negative again. So. And remember, these are just two different intervals. I'm just 60 seconds. I'm just getting a little bit bigger picture here. And this is the one I'm really focused on, the 15, right there. I'm going to try this one more time. What the heck? Just because it's fun. And I am going to use a discretionary stop though, because last time they just came down and got me and then it reversed. So I'm just going to get that way out of the way. That's not a stop. I will use flat to stop, but this trade is actually working this time. So let's scoot that target up a bit, see if we can't catch this pop. It's really got to hold here though. I'm going to get flat if it doesn't, but you know, it's teasing the bottom of the range. There are buyers down here, but they're not aggressive enough yet. We're seeing sweeps down, but now we've had a few sweeps up. So, you know, from a pure price action point of view, this is a very interesting long if you can manage the risk. And that's the problem. You know, if that low goes, I might get, you know, might come down to me really quickly, but I'm not going to put a hard stop in there just because see, it's touching it and then coming back up. And that's how you get stopped out of a good idea. So, you know, at the moment, as long as the bottom of the range roughly holds, I still like this idea, but it's a very speculative idea. It's just, I'm really just having fun this morning. You know, I've got $12 loss here. It's a $12 risk. It's pushing lower. I probably don't want to be in this anymore. Again, this high volume node is what I'm trading. If we can hold it and it's really trying, then going up here could get really interesting. But I think we're offside. Yeah, I think we're going to be offsides here. I'm going to give it one more try up into that high volume node. And then if that doesn't work, we're going to get out of the way here. And it's all right. So that's what I'm expecting. Look for the lift there. I'm going to reset that. Let's see if we can get some lifts. So watch the volume to pick up and a lift. That's what we want. We just have one right there. There's another one. Okay, if it can hold right here, that will continue. If not, you know, if it's on the other side, if the volume picks up to the downside and it breaks the edge of this range, you know, then I'm just wrong. So, you know, for argument's sake, I could stick a stop right there now. And, you know, that's probably a little too tight. Maybe there's a little better. So we'll risk 25 bucks. But, you know, that's too much risk. I'm really, you know, I really am just playing with the setup, but it's looking like it wants to work, so I'm going to give it a little more time. But I'm going to scoot that stop up now to like right there. I don't want it to take that low out, but I don't know if I can get to the flat button fast enough. I have a flat button on my mouse, and you might see that happen where everything just suddenly goes flat. That's because I hit it. It's like me pressing that button right there, but I have it on a shortcut button. Okay, this is what I want to see. There's the lift. There's another lift. There's another lift. There's a lift that got sold. So we're right on the inflection point here. So there we go. Now we can get a stop under it. And there we go. All right, we got a few ticks out of that, made a few bucks. I'm not going to try to get it all the way to the other end of the range. I don't know that it's got enough energy to get up there. You can see this is very two-way. So JVC, just for fun while you're here, are you trading the oil open? You're probably not listening to me anymore.
I am. Sorry. Yes.
Are you long or short?
I am nothing right now.
Were you long like I was, or were you short?
I've played it both directions, slightly underwater right now. I'm just trying to see what it wants to do because
I think it wants to take that out.
Ends, so.
Yeah, I know. I'm going to try to get another good entry into this trade, like maybe right there. I got it. Okay, let's see what happens. So now I'm long at 34, 68.34. And, you know, so I got a really good entry there. I hit the bid when it pulled back. That's how I did that. So now I'm either going to be right or wrong really quick, and I'm only risking like $9. So boy, this really wants to go up. The sweeps up and the uplifts are on bigger volume, but it just can't get any traction. So there we go. Okay, let's get a stop under it again. And maybe we can catch a sweep up. Probably not, but I got another $4. There we go. That's what we want. Okay, now we got $5. It'd be 50 if it was the CL. All right, so that's fun. So now I'm profitable in my oil micros. Again, I really want to be clear. This is not Jeff, you know, trading for a living. This is how I warm up in the morning before the ES open. And sometimes I catch great trades in oil, but you know, I don't commit. Sometimes I play it in CL, sometimes I play it in the micros, but you know, it's not a bread and butter thing for me. You know, I can have really good days if I get a good entry on a day we're moving, but you know, this still looks like a long if it can hold this consolidation point. Look how perfectly symmetrical that volume profile is. I mean, that is a perfectly balanced market. The VWAP is also right there, and so is the POC. So everybody agrees on value right here, but remember, weak high, poor high up there on the TPO view, and so far pushes down, and there's been a couple of really aggressive ones. Look at this right here, have been bought, and they've been bought right at the bottom of the range, and the bottom of the range is 30 right now. So, you know, that's what I did a second ago. I just hit the bid and I caught, what was the entry? It was 34. And, you know, so just when I see, you know, it pushed down and the LTQ pops up, the volume goes up at an inflection point, like it just is doing right here. And then, then we get a lift. So right now that's a long, as long as it doesn't get below that 38, and there it goes. That's how you read the very, very short-term action. Just watch the volume, and is that volume lifting the market? Is it pushing it down, or is it keeping it in the range? Right now, when we get volume, it's lifting us. There it goes again. Now, this is probably the rest of the long trade that I wanted earlier. I might just grab this here and see. It's thick up there, but it really feels like it wants to go. So I'm going to see if I can get part of that move long. But the real spot to be entering that move is like here. So maybe we'll play more than one this time. 34 was the last bite. 40, yeah, that would be a good spot. I still think this might break long, but I don't have a good entry this time. So what I'm doing here is I'm just assuming the VWAP, high volume node, highest, the POC, assuming all of that holds, then I'll add right there. That's why I've got that order right there. And I think this is going to end up being profitable anyway. We'll get out of it early. There we go. Okay, so we got another $5. So we're up $15. But we're having fun, aren't we? Anyway, now I don't want that one. That was an attempt to add to that position. So hopefully you're understanding my my tactics and risk management. Okay, so Summer has a question. You're moving your stop because you got stopped out. Yeah, that's not my stop. Again, I don't use fixed stops. It's just when I put my bracket on in this particular 2-leg CL bracket, it puts it up. I think it starts at 10 ticks or something like that. It might be 15 ticks. And again, that's just in case I put the trade on and I immediately get swept out of it. But in general, those are places that, if they hold, I really want to add to my trade, not flatten it out. And that's just again, because I'm trading the ebb and flow of this little range here, and it does have a bid under it. We're going up. Look at the 15-second view. So that's why I was doing that. Hopefully that makes sense. Yeah, and in NQ, again, if you're playing, that's why I love micros in NQ. I almost never play the minis anymore in NQ. I'd much rather play more commissions and get, 10 tries for every entry. So, I'll go into the micro NQs, like 4 at a time or 2 at a time. And absolutely, that's why. Adding to what, this is the old bullshit, good trading practices. Never add to a loser. That's not a loser. It's a better entry of the same idea. And those are very subtle but critically important differences. And all of you in the audience, think about that right now. Many of you, and I've seen this when I've had you sim trading with me, your automatic response when a trade starts to go against you is to flatten out. And that's not a bad response. But are you doing that consistent with your trade idea? Or are you doing that just because it's going against you at that instant? Because if you do that in ES, you'll get just creamed. If you do in an NQ, you'll get really creamed because trading goes both directions. And so you have to stake out spots where, particularly in NQ, let it come to you and stake out a spot where, you can put a couple on, you can take a little heat, but the idea is still valid. And this is what I was talking about. You always should know the exit to your trade, not where the stop is, the exit before you enter it. So, right now my long idea is playing out really beautifully here in oil. I'm not in it, but if I was doing that trade, remember I said, it's the idea that's going to break the top of the range and it's doing it right now. Well, where was that? Remember, I was doing that because right above there's a poor high at 68.64. We're taking it out right now if you're watching this on the TPO view. So that's a really logical spot for us to break through. And it's much more symmetrical at the bottom. So this could cleanly go up and to this high. We could go to 69.5 from here. So there's no place on an oil trade like this I would automatically get out of that ledge break up. But I don't want to join it here. I want to be in it back when I was talking about earlier before I took profits on the last one. Because, at the top of this range, we have had a really aggressive seller. At least once, look at that. We sold off. We had wicks 3 minutes in a row, and then we sold from right here. That's why ledges always break, by the way, 99%, because that will happen. Now, the question is what happens next? Does it go back to the range or does it continue with energy? And, don't predict it. Just let it tell you. If it pulls back to, where that break was, that's not a bad spot to buy it again because, this was really strong energy. What you don't know yet is, was that strong energy due to stops or, people taking profits, or are they still in their longs up here? It's really kind of hard to tell. There's not a lot of absorption going on the footprint. So, This looks like it's got more to run. It took out that poor high, but just barely. And again, this has been the long setup I've been looking at for oil all morning, and now it just played out. It's over. And we got about 15 minutes till the indexes. That was beautiful. Yeah. I wish I'd stayed with it, but
yep.
It is one liability of number one, managing risk, number two, teaching and trading. I always default to good practices so you guys don't see something that you shouldn't see. So, and but that was a really good example of how that would play out and where the risk would be, and how, you might have to take 3-4 tries at that to get it right. And, but the idea still worked. So, that summer, that's a really good example of where, adding to that would make total sense as long as you had a good entry. What you don't want to do is, be long up here and start adding to it, because, then that's just FOMO. If it's a logical spot and that logical spot is holding, then by all means, forget this bullshit you hear from, good trading practices, never add to a loser. Well, define a loser. If I'm still in the trade, it's not a loser. The idea that I entered the trade for is still working, and I can add to that with a better entry, then I should do that. Either that, or I'm not as confident in my trade as I think I am, and I shouldn't be in it at all. I like to make these things much more dramatic decisions. I've learned over the years, and I've seen this over and over again in students, that wishy-washiness is the absolute worst thing that you can, you can have really strong opinions that are wrong, as long as you're not wishy-washy and, you're right or you're wrong and you stick with your opinion, and it's based on some sort of odds, then you're good. The mistake people make is they start fudging that, and then that's where the monkey takes over. So anyway, all right, this is a good time to do nothing until the indexes. We've got about 15 minutes till they open. I'm pretty much done with oil. I think it did the thing I was looking for today. I only made $15 instead of $1,500 or whatever, but that's okay too. It's funny, Lee and JVC and I have all experienced this. Whenever you're trading live, and if you try to do it with too much size, you make bad decisions. So I've learned that if I'm going to trade live with real money, or in a combine or something, or just to scale down, that way I can really focus on demonstrating good decisions and not focus on my P&L. But the result of that is it damages the P&L. You don't make, the good setups don't pay off as well because you're scaling down. But that is a trade-off of teaching. Okay, let's see. Yeah, hopefully they will. Summer just said something that was something I said a while ago was gold for her, and she hopes everyone in TRG heard what I said, or wish they could. And hopefully they listen to the recordings, and if we say something enough times, it burns in. So Lance, that's a good way. Strong opinions loosely held. Well, a lot of it's about your confidence too in the quality of your decisions. One of the things I hear a lot from new students is, I sound really confident, and I am. I know when I'm wrong, and I know if I'm taking advantage of being stupid, and I'm wrong anyway. And I know myself really well. That's one advantage of getting old and still being alive. You kind of know your weaknesses and strengths. And so after a while, when you're being stupid, you know it. And I'm pretty good at that. But getting to the point where you really trust your instincts, and you still make decent decisions, and you don't get monkey-like, that takes a lot of time to get to that level. By the way, we're watching the very fast charts here for ES and oil and whatnot. Now, you got to understand that this is really difficult stuff. I brought over the 5-minute view here just so you could see. Look at the wicks on this 5-minute view. So you have this really strong trending move, but on one of those 5-minute bars, the high was 02 and the low was 81. So you can't tell me that there's a gameable pattern in there, David. I'm pointing this at you. It looks like there is, but you couldn't have managed risk in there. So the first time that you trade that pattern and it doesn't work, you'll blow up your account because of how much room you have to give that pattern to work. So I'm responding directly to your pattern about the pullbacks in NFP. Even if it's true that pattern that you suggest exists, and I'm not saying it doesn't, I'm just saying I've never looked, because even a year of that pattern isn't enough to be significant. But assuming it does over 20 years or 10 years or whatever, it's still not a tradable pattern because of the size of the range on just one 5-minute bar there was what, 22 handles or 100 ticks. It's not possible to manage a strategy that has that big a range. I hope you understand that. Okay, if you don't, think about what I just said and go back and look at it. All right. Yeah, that Summer says, I think my loss aversion and survival bias sway my ability to assess odds more often than I like. You keep yourself on a short leash. That's as a newer trader, that's a good bias to have. Protect your capital. Even if you bail out of good trades. I just did it. I just bailed out of a really good short, taking a 6-tick stop just because the potential to get run over by another 20 ticks was too big. So, the idea worked, but I took a loser on it just because it's not worth sticking to your guns just about money. Remember, the game is to survive. I say this over and over again, and you guys don't listen enough if you're new. The guy who really took this to heart is Darren. Darren ate this point up when I first made it back in the workshop in 2019, and you've seen the results. It's made him a really good trader. When you're new, you absolutely have to err on the side of protecting capital and surviving. Because even if your odds are good, you could have a streak of 20 losers on a 80% winner setup. It happens. So you have to understand that just staying in the game is winning the game. If you can just stay in the game, not lose money, and when the conditions are good, make money, then you are already in the top 5% of this game, and that's critical. It's about survival. If you can't survive, you can't trade another day, and you have to live to trade another day. So that's why that's just got to be the most important thing you think about. And you're new for years. Yeah, Amy just said that's right for about 5 years, and you are new, quote unquote, for years. Absolutely, that is so true. I do the same thing, Amy. I've been trading for, God, now it's going to be, it's getting to be a ridiculous number. We're approaching a number I don't even want to name, but 50 is coming up. Years of trading, 50 years of trading is coming up next year. So I still do that. CK is here studying with me one-on-one, and he's seen my desk. I've got these little 3x5 cards, and like right now I'm working on this, sticking to 6. I'm trying to run a risk algorithm when I'm trading the ES to have an absolute line in the sand hard stop of 6 ticks on every single trade. And if I'm really discriminating, I can do it. And it gets my MAE down to like 1 or 2 because I rarely hit it. But in this volatility, the last couple of days, I have not been able to do it. But I was doing it pretty consistently for a couple of weeks before that. So that's my latest, can I tell people that if you're trading well in ES, you can put an absolute stop somewhere? That's kind of what I'm testing. And I think it's possible to do it at 6 ticks if you really are disciplined about your entries. But I'll get back to you more on that. That's a little risk algorithm tool that I'm working on that I've been playing around with for the last few months. Oil, I have not found anything that makes sense to manage risk. There's no logic in oil. You have to just go with the day. And by the way, look where we are over here in oil. We're up at 69. So remember, the long to break 68.60. It's a great trade. I don't know if JVC went back into it. That would be, what time is it? Okay, that would be the B to A.
Sorry.
Did you take it, JVC?
I'm done. Yeah, I was just going to say I've hit my daily goal for my funded account, so I'm done.
Cool. You did it on the first trade that we were both in, right? That long off the low?
Yeah. It took me several stabs at it, kind of both directions, while it was trying to figure out what it wanted to do. But once the structural long got its act together and started to go, it was really clear what's going to happen. So I added a second on the way and caught the pop, and it was really sweet. So.
Yeah, you can see it over here on the 60-second view, particularly if I crunch it. It came down into the range here. This is why ranges are so important. In fact, I want to draw on this one. This is such a good example. If you're not listening, wake up, pay attention, and look at your screen, because this is critical gold here. What happened, and we watched it live, and I traded it live, and so did JVC. This is the bottom of the range down here. This is the top of the range. It broke that range, and then right here, the first try, and then it pulled back. And this is what we were trying to buy, was it holding this with that weak poor high that was right. Let me do a different color. The weak, where the heck is the color scheme thing? There it is. Okay. That weak poor high was right here. and it teased that it was going to do it the first time, like right there, see? And then it didn't. Then it pulled all the way back to here. And that was the gold mine entry. And you saw me take it, and I scalped it. But you actually you could still be in that long. Actually, it's still a good setup. The pullback to right here, which was where that poor weak high was a good re-entry to that long. And now you could be defending your profits, and it might have another push up. This top over here is not clean. You can see it just chops right off. But that was the case of the poor weak high that we just took out. So that might or might not resolve itself in this session. But that was just a classic example. So everybody look at that really carefully and take notes. And that is just beauty. That is how you interpret a range and you trade a range. And that we tell you guys over and over again, whether the range is the min max delta or the higher or the low of the short-term trading, which is what I use, or the initial balance, whatever it is, the key to profits is in ranges and understanding when they hold, when they break, and what that looks like, what the order flow, look at this. This is also high volume reversal, guys. Is that not really clear? We came down really hard to an old inflection point that we had been trading off of all morning, and then instantly the buyers jumped in and just crushed it up. That is exactly what a high volume reversal looks like. And that is my favorite setup by far. Of course, I didn't trade this one. I was buying the low end of this range even before that happened. So, but again, if I wasn't teaching and I was really dialed into oil, which I wasn't, that would have been something I would have jumped on with a lot of size, not micros. All right, now let's go over to the indexes. I'm going to switch my footprints. And I'm going to minimize this in a second. There is a question. Is oil similar to NQ or ES? It's much more similar to NQ. It's thin and it sweeps and it loves to blow through ledges. NQ might do it by 20 ticks. Oil could do it by 60 ticks or 40 points. I mean, it's insane. Oil, that's why you get these great momentum moves. Oil is a really good momentum trade if you can master its quirks. I've made the most money and I've had the roughest losers in oil. And I know Amy has the same experience. Many of us do. So
you know what though, Summer, I'll add one thing to that. Everything Jeff just said is, of course, totally true. There's one interesting little thing about oil, though, which is that from a statistics standpoint, it is actually a lot like ES as far as things, the IB break and the B to A, all those statistical setups. So it's, in a way, it's sort of the best of both worlds. You get the energy and the momentum and so forth of an NQ, but you actually have some of your structural edges like ES. So it's a really neat kind of hybrid. I like it.
Yeah, it is. And I just posted a comment for everybody that Amy said, and I totally agree. This is a cool format. It's not like a trade room because we're all roughly using the same tools and ideas. And I'm not telling you what to do. I'm just kind of giving you stream of consciousness. Do whatever you want. So it is like a mastermind. I really like that idea, and
I'm loving it too. 100%.
Again, mine are going to tend to be more interactive than Lee and JVC might do, but that's just my weakness. I have teaching illness. Okay, so yeah, great points. Yeah, exactly. That's totally true, Amy, about CL. All right, I want to get focused. I want my brain to get on the indexes, so we're going to stop talking about oil now, and because this is going to be a really interesting open. And so that's my little reminder. This is something I've been working on with another student that's trying to scale. It's a little acronym we came up with, which is kind of fun. I like doing those. So he's more intensely focused on shorter term with more size. So this is someone I've been coaching that is really profitable consistently and has been for a couple of years, but he's got a real mental block about getting scaling up. And it just the dollar numbers start to freak him out. So I'm trying to get him just used to scaling at the absolute right times, and by focusing on more intensely. In other words, go into the market really aggressively when you've got ace king, and get your money and get out. And that's the first step to learning how to scale well. All right, I think I might just minimize oil here. I think, it's going to distract me. I'm just going to close oil because there's too much interesting stuff. Coulda, shoulda, woulda over there. So we'll close that one. And I'm just going to minimize these. So everything on my screen now pertains to the indexes. And I'm going to do one other thing real quickly here. when I'm scalping the open, I like to have these kind of 15-second and 1 minute views, and I've got 15 seconds, obviously. So what I'm doing there is I just duplicated this guy. And again, this is just, I like the visual geometry of this. It's not anything more than that. And then all I'm doing is making an NQ1 here too. That's what I was doing. So that way I can see a little bit more time than 15 seconds. So I can see if I want to know where to fade NQ, it responded, that same way with a big burst up. And so right now, that's a really interesting inflection point for NQ. And so is this area here, because the wick would have been getting lucky. This is really where it turned. So that's an area that could be in play. And then another one is the other end of the range. It's been pretty strong down there. It bought off of that, but we're drifting down, and we made a lower low. So a short here could get interesting if it gets aggressive. So I like to watch those. And again, remember, all I'm doing is duplicating something that's already on my other monitor. I have a broken neck, literally. C2 is fractured. It hurts like hell right now. I screwed it up when I was in Tacoma. And so I just don't want to turn my head. So I do that as a quick way of seeing that. And just for consistency, I'm also going to put, I use a different color scheme. That way my eye instantly understands that's NQ and that's ES. All right, I'm going to go freshen my coffee. The market opens in 3 minutes. I will be back and we will continue talking, and I will continue with the comments and whatnot. Yes, great comments from everybody, by the way. A bunch of you were saying that to me. It's an excellent room this morning. We've got a lot of good feedback and a lot of good interaction. JVC's, Amy's, Summer's contributions are excellent. So everybody keep it up. All right, I'll be right back. Okay, I am back. You see my reminder to do what I just did over here. Just blowing that up so I get a little bit of context without turning my head. Out of my eye, without just by moving my eyes, I can see the footprint charts that are on my first monitor. But this stuff is on my far left monitor, and it's just far enough. If I turn my head that way, it hurts like hell. So I'm not doing it. Okay. On topic of survival. Awesome. Maria has had her funded account for 6 months now. That is so cool. My trading is still intermittently competent, but survival has been my number one goal. I'm slowly inching forward with my P&L, but the account is live and going. That is exactly 100% the right answer, Maria. Okay, so I'd love to fade another move up there, to 2, but I don't think we're going to get one. The Open 5 momentum right now is down. You guys know my Open 5A trade is a momentum trade. I only do it in ES. I use market orders in and sometimes fixed targets. This is just way too sweepy to even think about trading yet. Let's let it slow down. It's a long, if anything, but it's a short at 2 right now. So this, when we're getting 6 and 8 point sweeps, watch this, watch the sweeps on my momentum. This is momentum tails in Jigsaw. It's basically 300 milliseconds or so view of the momentum. And that's why it gets brighter blue or brighter red. And when it's bright blue and red at the same time, it's going both directions. So literally not tradable. Might nibble long down here. I really want to be short today, but bottom of the range, the volume profile is holding. Yeah, this is still not tradable, but look at those sweeps going on in NQ there as it pushes down to fill its gap. So this is a total rounding error day. Literally, we're up 0.25%, which is a rounding error in the index. So this is meaningless movement, except it's really sweepy. So don't get too bold here and think you're a genius going one way or the other. If you made any money, you're not. You got lucky. I'd love to be long here and short up above big fat whole number. That's my thinking. But again, it's a little too sweepy to even think about it. Right here is a good long if it holds. High volume node. So maybe nibble there. It's going to get away from me too fast. Okay, so now we're thinking about fading the other end of it. So maybe here, maybe here. It's coming up a little too strong to get faded though. So I'm going to cancel that buy order down there, and I'm going to, we don't want that one. Canceled the first one. It's coming up way too strong to fade. If you're long, you're in good shape, but you don't want to join this long because there's 8 tick sweeps going back the other way. Way too hard to trade, but you can see why I wanted to be long. That's why, it was really clear it was going to do that if that range held. Okay, I may be getting filled up here. I've got a sell order at 475. And I got filled. Okay, let's see if we can catch a scalp down to 2.5, maybe, or 275. Let's go for 3. It's moving pretty fast. So yeah, so where am I wrong here? If it clears 7.5. So far it's not. I think I'm going to be able to get a point out of my scalp here, but let's see. I think it's going to sweep down, so I'm going to shoot for more here. Let's see if we can get to right there. Mr. Liquidity right there. So move is not diminishing in energy though, so I'm probably early fading it, but I probably can still get, and I got it. I got my 6 ticks. So that is how I fade strong moves up, by being really discriminating where it might work and getting out of the way quickly if it doesn't. But that's my favorite trade right there, to fade a strong move. That was a baby high volume reversal. It's not quite done yet, but so this could still be a long, could be a short again. It's moving around too much again. The key was, if you're going to fade it, you got to get the edge of the range like I did. And and maybe I wanted to hold this, but not with those kinds of sweeps. So I think this might still go higher. I'm going to put an order at 7.5 and another one at 7.25. That'll put us up about 35 points. That'll be interesting. This is not a clean top. If you look at this top has, it's not unfinished business, but it's just not clean up there. We took out the overnight high already, so ADA overnight is already a winner. I'm going to short this. My gut is just that the short's going to keep working here, so I'm going to keep picking off shorts. And there's another one. Okay, that was another 8 ticker. Hello, baby. We should be doing this in minis. I'm now sitting down and concentrating. I was standing there sipping my coffee and just screwing around. But now that it's working, I'm starting to pay attention. Isn't that funny? Okay, so we'll try 5 and 6 for another push up. There's some decent selling up there. I could get run over, but not likely. You'd probably get filled and be able to grab some scalps up there. But bear in mind, this is I'm counter trend. I'm just scalping the top of the range is all I'm doing. I'm respectful of that it's going up, and that's why I was originally looking for a long down here. Yeah, right around 0 is the danger spot, the bottom of this high volume node. It's also the VWAP at the moment. Yeah, really dangerous to play either way at 0. It could go either way really hard. If I'm going to fade it, I want to be much further up. Now I like 375. I just moved my order down there. I'm going to leave those 2 up there. That one's at 6, which is useless. Let's go for 2.5. Let's see if it holds. Oh, hello. All right, so the idea that short is the right answer is accurate. I nailed it, but I'm not in the big move down. I kept trying to catch it. Let's see if we can catch a push up. Look at these sweeps though, guys. Don't try to do this in minis. It's just sweeping way too far. Look at this. Wow. Notice how it did that right at the bottom of the range, though. That's why we look at the range. That was a big negative delta, but it took price down and then it immediately got bought. So there's still a bid under the market around 90, 88, whatever. And there's sellers up here, between 2 and 5. That's the game right now. That's a huge range. So, don't stay out of the middle. Either play the bottom either way, long or short, or play the top either way, but do not try to play the middle of this. It's just craziness. You have no edge in the middle. Now it looks like it wants to go down more. A gap fill is 16 points down, so that's totally feasible. But we've seen over and over, buyers are coming in the high 80s, low 90s. That's the problem with just keeping a short. That it's done that 3 times now off that low. And it's doing it by 10 ticks. You can't manage risk under those circumstances, even if you see that it's going one way or the other. Risk management is paramount. So once again, we want to either, I don't like buying this. I'm going to look to short the top. I don't want to buy the bottom of the range right now, just because it's precarious. It looks like it wants to fall through there at some point. And so that's why I'm not looking for longs. I am looking for shorts. Haven't looked at the internals yet. We will do that in about 10 minutes once the market's been open for a little while and see how this is playing out in terms of up and down and advanced decline. But right now it's large range price discovery. We're price discovering between 88 and 04. So be very careful. Remember, if sweeps are only tradable if they're going the way you're trading. If you're short and it's sweeping down, you're in good shape. But if you're short and it's sweeping down and up, which is what it's doing right now, good luck figuring out which is going to happen next. Sweeps are not predictable. They are big, larger volume trades that are hitting the tape, that are taking out multiple levels. And again, by definition, that's price discovery. So, don't just trade when you don't have an edge. Right now, the edge is the edge of the ranges. There's no other legitimate edge in this price action besides what's going on at the edges of the range. And right now we're right on the big negative delta of A period, and positive delta is way up at the top at 06. I take that back. It just moved down. So now this is a contested level. Positive delta and negative delta are right next to each other. I'm talking about this right here, guys. You can see on the pullback and on the A period bar. So this is a really important level. There's a bunch of limit players duking it out there, and we can see that on the tape. We can see it on the dome. That's why, and see, we look at this. We go up, 4, 6, 8 ticks at a time. Don't think that you're correctly reading this in the short, the short moves, because it's literally random. This is a good example of what random price discovery looks like. Particularly now that both the min and max delta are now right here too. That even further strengthens. When they were far apart, it was a big range, but now I interpret it as a big range that's contested right here. So it's getting a little bit more information as the market's been open a little bit longer. That's how market profile works. The more data we have about the auction, the more we know about it. Right now, we're on that contested level right here. We're actually slightly below it. Min max spread out again. So now we have passive sellers in control here, up to about, call it 52, call it 92. So right up in here, that's where the passive sellers are, and that's the min delta at the moment. So, that's kind of a line in the sand, and we're pushing down from it. So looks like we're going to take those lows out, but I bet we'll see some sweeps up, and there they are. Yeah, just not tradable stuff. We need to let this just settle down. On the other hand, I think it's going to be really tradable in about 45 minutes, so I'm not in any hurry to play here. I want more predictability, and I want to go in with more size. I don't want to play micros. So I'm just going to let this entertain itself. Meanwhile, I'm going to go over and see what's going on in the internals. It's about that time. Okay. So it's early for up volume and down volume, but down volume is stronger right now. Advanced decline started out fairly strong and has dropped precipitously ever since. It's still positive, but it's almost at zero after being plus 1,200. And same story in the tick and cumulative tick. So the market is selling off, but it's not doing it aggressively, and there's big buy sweeps. So shorts are just going to be impossible to manage. Look at this. As I said that, there was a 12-tick sweep up. So yeah, that's why shorts are impossible to manage. But boy, would I be interested in a short maybe at 96 or 98? Yeah, I'd probably fade it up there. So let's watch that, see if we can catch a short. I might just short the tape here. If it stops sweeping up, I'm considering shorting like 90 to 92, this part of the bulge right here. A sweep up there that starts to sell, I'm going to hit the market on and go ahead and sell too. But I'm not going to just sit there and wait for it. So I'm looking for 90 to 92 to sell. On a sweep up, here it comes. So again, right around there. Do it on both. Probably won't get there. The micros will try to scale into this exact same idea, and we'll just try to poke it with a mini. So let's see what happens. Okay, looks like I might get one of my micros here. I'm gonna try to grab one, and I can't get a fill, so I'm right. Okay, let's push it down a bit, see if we can get a micro on over there. We got one. Okay, get that stop out of the way. We'll try to add to the micros. Meanwhile, we've got a short here at 88.5. I'm trying to scale into that up to 94, by the way, but it's not letting me. I'm already profitable. Good trades work right away. Some guy said that once. Anyway, but again, look at the sweeps here. Yeah, in the mini, this would be really hard to manage. I'm going to get that order further away. I don't want the mini yet. I want the mini to be at a really obvious spot, but I'm happy to scale into some micros over here because it's already making me profitable. And if I go to right there, it's done that a bunch of times. There we go. So we'll take 6 ticks if we can get it right there. And nope, it's sweeping down. We're going to take 5 and boom, we got it. Okay, so we got a winner there for a few more bucks in the bank. Definitely want to get short, but it's sweeping too much. Just hang your short up and hold it. You might catch a really good runner, but you're using way too much risk to do it. So you got to get a better entry, Jeff, or anyone else. So again, I'm trying to scale into that one. I'm putting this one way further away. So if I do catch a pop and fill that, the risk is lower. because that's the mini. But I really don't think we're going to get back to 95. I think what's in play here is 87. Well, now 85 to 92 is what's in play. So that's what we want to try to sell. So let's see if we can get one a little bit closer to that on a push up in the micro. We got it. Okay, so I'm short again, 89.25. It's already profitable. Let's lock in 4 ticks. Ooh, caught a runner. Perfect. Okay, so that's what you try to do. I am short from 89.25. It's 85.75, and I have a massive locked in profit. I've got to take profit at 87. I'm going to move my target completely off and just let this drop. This might have been a perfect entry. I'm going to lock in 86. It's trading 84.25. I'm short from 89.25. So I have 3 points. Now I have 4 points locked in. Now I have 5 points locked in. This is the holy grail of scalping, when you get a good entry like that and you can just write it down. Okay, we just took profits at 84.25. So that was a nice little 5-point 20 tick winner. I'll take it. I'm not in a hurry to rejoin it again because it's consolidating a bit down here. So cool. All right, where are we at? God, we haven't even been trading 15 minutes yet. Time flies when you're having fun. All right, so yeah, it's selling off more, but again, look where we are. We're coming right back into the overnight range. The overnight low could be in play now, and that's way, 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 way down there at 52 and change. But again, I don't want to join this short because it's sweeping up too much. You know, again, if you're in short and you can protect yourself like you saw me do, okay, there's a pop up. This might be another place to short it. Right there, and not 82. That's just way too far down. So this ledge is probably going to go, but again, there's buyers down here. Manage your profit. How do you do that when it's sweeping up? Okay, there it goes. There's the ledge break, and there's a 6-tick sweep up. There's an 8-tick sweep up. Yeah, the only way to play this is to go in and out. You got to be scalping, getting good entries, taking profits quickly, like you saw me do, trying to ride this down. Yeah, you may be lucky and you may be riding it down and protecting your profit, but understand when I tell you you're lucky. This is way too sweepy. Do not, if you're holding a short here, do not assign that to that you're a great trader. Assign that you're just lucky, because this type of action, you know, you are. If you're holding a short profitably and it's not sweeping you out, then you're taking too much risk, and that's okay, you know, but understand, you know, you're not a genius if you get a killer winner on that move. Okay, this is a good spot to maybe re-short. So I'm going to try to get a short there. Oh, I couldn't fill. I'm right there. Ooh, that's the market's way of telling you you're right. Okay, so now I'm short again from 82.5. It's already profitable, but it's teasing me. This is one I want to scale into. I've got orders up at 90 and 93. I don't want to stop that tight. So I'm obviously going to give this a little bit of room because I still think it's got downside potential, but well, there was a price rejector at the low. Well, no, there wasn't. There was just a weak low. So let's watch this. All right. So, you know, you're going to have to take heat again. This is what I was saying. If you're going to try to play short, you're going to have to take some heat, but it looks like it's going to play out. See if we can get another one right there. Okay, we did. Cool. All right. So I just hit the bid there, try to get a little bit better entry. We'll take the first one off right here at 81.5. We did. We're profitable. Lock it in there at 83. Move the target down. It's going to fill me, but I'm taking profits. That's okay. So that's an example. If you're going to scalp this or if you're going to short it, you've got to be in and out and you've got to take profits fast. It's just too sweepy. Again, do not infer large profits this morning in a steady short position as you did the right thing. You are lucky if that's happening, and God bless you, but do not result about that. This is really tricky action. So where else do we like it? 85 looks interesting again. So that's, you can see I've got shorts sitting up every push up. I'm going to try to sell because that so far is working. You know, look at the range. We're making lower lows and we're not bouncing to higher highs or even back into the range. So it's a very weak trend down or direction down. So I want to short it, but I don't want to do it where it's weak. I want to do it when it's going the other way. Okay. Yeah, RTY has turned negative. Those of you pointing that out, it has, but it's not even down 1% yet. Remember, you know, a big aggressive drop for RTY will be when it's down 2 or 3 or 4%. We're still in the rounding error category. Remember, at these numbers, you know, at the prices we're at, absent, you know, 1% or more is significant. Anything below 1% moves literally are rounding errors. So the only thing you can do, you can't infer direction or momentum until we get above 1%. So just to be clear, yes, RTY is leading down, as is NQ, but it's still in the rounding error category. It's still so low of a amount we're down by that, it's not statistically significant. I just put on another low there at 83.75, and again, it's already a winner. I'm locking in profits to 82.75, and we'll let it rip. So I'm doing exactly what I just told you I was going to do. Every bounce I'm going to sell, and I'm going to do that until it stops working. And it's adding up. Here's we're up $10 on this little one lot. Those little $10 and $20 trades add up. You do a few of those, you're up $100. A couple more, you're up $200, and you're not taking any significant risk. That's the point. Okay, I like 87 and a half again. That's the quarter. In fact, I'm going to front run the quarter, and I'm going to put another one right around here at 87 or 85.75. So that's this low volume node. I'm assuming we're going to come up here and fill in this low volume node, and I should be able to get short right about there. And you can see Mr. Liquidity is also right there. So, and he must be smart if he agrees with me. And there it goes. Yeah, I get, if there's any doubt in your mind this is a short the bounces market, then you're not reading it right. But, as I've said over and over and over again, getting good entries here is going to be critical to this. And so far I've been fortunate I've been able to execute on good entries. And again, I'm doing that by hitting the bid mostly. I've got limit orders up here, but I have not gotten to them. So what I'm doing is I'm looking for places when it's going up where it stops going up and the volume turns around, and I'm just hitting the bid to get short. So, or long, depending, hitting the bid or hitting the ask, depending on whether I'm going short or long, just to be clear. Okay. Yeah, that's an interesting spot in NQ. Absolutely. Summer was saying 880 is interesting. I agree. If you blow up NQ, a lot of I've got those always on top. That's right here. Let me just take NQ to 5 minutes real quick, and you'll see there's a bunch of really interesting spots in NQ right now. We're at it. We're at one of them. This is kind of the overnight weak area. See it? So if this doesn't hold, then we'll probably drop pretty hard. But again, I don't want to be short on these edges. I want to be short going toward them. I want to get short higher up in the range. So even if the range edge doesn't go, I'm still profitable, even though these range edges are going. But again, I'm focused on managing risk right now, by getting good entries, not about how much money I can make, because this is a tricky day. It's a tricky tape. And look at that. We just bounced off 72 and a quarter, and we're at 76, 77. This is a 5-point bounce. So again, if you're short thinking, oh, I'm in a great, you got to be taking profits and cycling in and out of this, or you could end up at the other end of the range really fast. You could end up here where I'm trying to get short, on a bounce. Why give yourself that risk? I'm going to cancel that one, by the way, while we're up there. So, I keep stacking my short entries, lower and lower down as it moves down, and that also makes sense. So, the push up here to 81.82 was pretty good. So maybe up in there is a place I might be able to catch another bounce. But, you could try to catch these ledge breaks, but you're getting wicked buys when they break. They're breaking, and then it's going, 8, 10 ticks the other way. So, staying short would work over time, but your risk management's going to be horrible doing that. So we will continue to short bounces here in Jeff land. Coming up to the top of A period here, we got about 10 more minutes. I'll be real interested to see what the B to A looks like today in the indexes. It could be very interesting, particularly since we're all the way down. We're approaching the overnight low reasonably aggressively here. So if you're watching on a 30-minute footprint, which I am, I'll scoot it over here for a second. You can see it on the edge of the left edge of the screen. This is a pretty ridiculously good A period drop with a price rejector at the top, but it keeps doing this. The pullbacks keep getting price rejectors that are bouncing. And so that's why, again, you got to get good entries if you're going to play short. And let's see what, obviously the B to A could be very interesting because it just could be the continuation of the short, or we could come all the way back into the range. So it's a very interesting setup for that, for B to A in ES. And it's coming up in 9 minutes. So I'm just going to kind of watch this. Obviously, we've got really good momentum down. And if you're finding good places to join it or let it come to you, this is a great setup. I'm just taking a breather here because I got a bunch of winners in a row, and I'm happy. And so I'm just I want to see how B period opens. That's kind of any sort of buying in B period, I'll stay out of the way. But so far the selling's been pretty aggressive. Again, the two directional sweeps are what's making this so hard to stay with a short. And it feels like, it's getting momentum, but we're down into the area that, like I said, could end up getting bought. So what's going on with the internals now that it's a little further along? Okay, so down volume is picking up. You can see that right here. It's nothing like the previous days, but it's on track to maybe go that way. So that's worth watching. And the other thing that's interesting is the advanced decline started at plus 1100 and is now minus 500. So that's a strong change in momentum, as is the deterioration of the tick. So basically this market is selling off. It's doing it reasonably aggressively. So good short entries make sense. I wouldn't infer that we have a trend day yet. We're way too early to make that assumption. We just filled the gap, now we're minus 12. So could be a trend down day. That's certainly a possibility, but I wouldn't marry that conclusion. Right now using my trend indicators on a 5-minute, we just went into a trend down, but it's a weak one, and it was a trend up right before that. So this is an inflection point to keep an eye on. That's all it is. So, focus on the price action. It'll tell you everything you need to know right now. There's nothing else that's really interesting. If you're watching a fast footprint, it just keeps, getting rejected on every bar. So you could just short the top of each bar if you wanted. I'm not saying don't be short, but just get good entries and take profits, because you don't want to get caught on a squeeze going the other way, which is not likely, but it's possible. We've seen a bunch of these look at these sweeps over here, It just swept from 60 to 62 and a half. How about that? And now 63. And there's a big lift going on right here. So, and then it just swept down to 62. So yeah, just a little too volatile. The book is really thin. There's a lot of levels that only have, double digits in ES. And that's just too thin. That's too much risk. But it's definitely a short. There's no question about that. There's nothing I would be looking for longs nowhere right now. I would only be looking for shorts, but I wouldn't just sit in a short. I mean, it's again, over and over again, really hard to manage that. Get good entries. And I'm going to start taking trades again after B period starts, because I think the sweepiness should calm down a bit and it might get a little bit more steady. I mean, this is one of those days where there will be plenty of opportunity to make money here. So be very, very patient, Jeffrey. Oh, and I am going to start trading the minis here in a minute. I just want less sweeps. I don't want to have 100 points of risk in a mini trade. So, and that's basically what it is. Right there. Okay, we just had that. That was 3 points, guys. So that was $150 risk if you were short in one mini, and now that would have been 250 there. So that's my point. And if you're short and you just rode that out, you just gave back a whole big chunk of your short. And I'll tell you, you're wrong. If you're holding your short and you didn't take profits, I will now completely tell you you're wrong, because this is just impossible risk management. So if you're still holding a short, I don't care where it's from, you're giving too much of it back. That's, you can have a different opinion, but I'm right. Okay, let's see. Nibbling long now. Yeah, exactly. These are scalpable both ways, Amy. I totally agree with that. That's exactly what I would be doing. And I'm going to start doing it. I just want the sweeps to calm down. Remember, my rule number one, if there are sweeps in the direction I'm trading, I'm a happy camper. If there's sweeps both directions and I'm trading both directions, that's cool, but that's a very dangerous, because they got to be going my way when I'm in that direction. So, two directional sweeps are, if you're new, sit on your hands, just enjoy the show. If you're a decent scalper and you read the tape okay, it's tradable, but managing risk is nearly impossible. So you got to do it in the micros and be patient. So I've only said that about 50 times. Yeah, see, now we're back up. Look at this. We're at 66 from 54. I mean, don't tell me you're holding short because it's a trend down day. If you're thinking that, you just couldn't be stupider, he says with love, but you're still stupid. I have people in the boot camps that do this all the time. They say, yeah, but it's still trend down. Yeah, but you just gave back 20% of your profits and you don't know that you're right. You may end up giving all of it back. Always take profits, full stop. You can re-enter a trade for the cost of the spread. Why would you risk that against, we just had a 5-point, 20-tick move, counter trend. Why would you sit in that short? When people tell me that, I just, what's your malfunction? You're wrong. Get out. Get used to being wrong. It's nothing wrong with you. You're playing odds. The best odds in the world are, maybe 80-20, 75-25. It's as good as it gets. So if you play that consistently, you will always make money, but there will be, 1 out of 4 times that you're going to make the wrong decision, whether you're good or not. Get used to it. Be wrong quickly. But don't be wrong just because it's going against you. That might not be the case. Make sure you have a clear idea in your head where the exit is. And being wrong doesn't mean I'm long and it's 3 ticks against me. That's not wrong. If that is consistent with the idea of the trade, that trade might need 6 ticks to work. So 3 ticks, you're still fine. You got to learn to think that way and focus on those parameters, not the prices. The prices are meaningless. They're being, look at this. We just had another, that's a 15 tick, now 20 tick sweep down with 5 tick sweeps up in the middle of it. So again, you're not a genius if you're holding short. You're taking too much risk. Okay, let's see. Oh, absolutely. Amy says people hold on to being right. That's so true. And your mentor is like my old mentors. Do you want to be right or do you want to make money? And in scalping particularly, you have to be really nimble. If you think of yourself as an intraday swing trader, that you might be able to be a little bit more flexible with it. But again, you have to have really clear ideas where you're right and wrong. And also, if you're going to be, an intraday swing trader and, like this is a trend down and I'm going to stay short, that's fine. Can you manage the risk of it? Are the bounces keeping you in your trade or not? That's how you evaluate it. I think trend down conclusion at this point in the day is a little premature. Looks like it could happen, but I still think there's too much two-way action. If everybody was selling, we wouldn't be seeing the bounces we're seeing. That's my point. Hopefully that makes sense. That doesn't mean, the bottom might not fall out and we could be down, 1,000 points here in the YM in a second. That can always happen. Just, read what's happening right now. All right, we're breaking a ledge again right now. We just broke a ledge by a tick in the micro and we didn't break it in the mini and the buyers came right back in again. Look at that. There's a lift. These are 100 and 200 contract lifts at the lows down here. And so these are baby pukes every time we make a ledge break. And we're not ledge breaking by 20 ticks. We're ledge breaking by a tick and then coming back by 20 ticks. That's the story right now. So if I was trading this, I'd actually be scalping the bottom low. I'd be scalping the bottom long right now because of that. I would let it break the ledge and then I'd buy it. And I'm going to try that right now if we get another ledge break. So, this is the ledge right here. So maybe we can catch 52.5 or, that's the next quarter down. But again, this is, the counter trend scalping strategies are risky. You got to be good at it. You got to let it come down to you. This looks like a long, actually. That's why I really kind of want to get it, but I want to get it on a breakdown. That way, I'll be asymmetric if I do get it. But, obviously I'm right because now it's 10 points higher than where I put that. But, that's the first phase of learning to be a good trader. This is getting too sweepy again. I'm going to cancel that. Is just doing what I'm doing. Just can you watch the price action and can you predict just watching it based on what you're seeing in the order flow? Can you predict what's going to happen in the next 20 seconds? If you can do that, you can scalp. And that's a whole lot easier to predict than what's going to happen in the next 20 minutes. Okay, there's the B period just started. So looks like B is going to take out A, so we should take the low out, and I think it's about to happen. Then the overnight low is down at what? At 44, 43 change. It's down there. So this low should go, but boy, it's getting bought down there. So maybe we're going to move back into the range. All right, we did it. We just took out A, B took out A. So there's the B to A. It was a perfect short. You saw it happen. I told you it would happen and it did because it was really obvious it was going to happen. Why didn't I trade it? Oh, I don't know. I'm having fun teaching today, so I'm not trading as much as I might. Also, these two directional sweeps, that's my number one warning sign of trading at all. When I see that, it's just like, yeah, like you just nailed that B to A break, but Jesus, look at all this movement. In a micro, I might have made 50, 100 bucks on that, but why risk 30 or 40 to do it? Not worth it. And, obviously in a mini out of zero, and I wouldn't be trading this in minis right now, at least not in a real account, maybe in an eval account I might, but It's just too sweepy. You're taking a couple $100 of risk every time you're in the market, and that's just why. Even if you're right. Okay, I'm going to start looking for a long down here, but not yet. It's right about the spot I like. I want it to push the ledge again. So if we get that, I'm going to nibble for a counter trend long. I might not get the opportunity though. We're consolidating right here. I'm going to join this. I'm joining that momentum long for a scalp, but I want to add to it if it comes down a little bit. Yeah, it's coming down a bit, but the trade is still working. This is the area I want to get long in. So let's see if we can put one on a ledge break, maybe right there and right there. And just get that reference stop out of the way. Yeah, it's going to come up and fill me here, I think. Let's just go for a 4 ticker. And boom. Oh, it traded to 3 ticks. Remember I said 3 ticks is the sweet spot? Well, it just traded to 3 and then it reversed. That's why I say that. But I think I'll get 4 out of this on the next push up here. Let's see. Let's reset the fast stuff here. Yeah, it's going to, it just traded 75 again. So that's where the sellers are. They're right below the quarter there, but I think they're getting chewed up. So, and then, you know what? I'm going to buy another one down here if I can get a fill there. So I think we're going to hold this low temporarily. I don't think it's going to get crushed, but I may be wrong. There's a baby price rejector on the pullback on the 30-minute. So, okay, can we get that one filled? We can't. Okay, so we're in the right spot. It traded above me twice there. So that's the sweet spot right now. I don't want the other one. I'll take one more. So we'll have a total of 3 if this breaks down and fills. And it's about to right there. Cool. Okay. So now if we get the ledge break, I'll get the original fill that I wanted around 44. And maybe we can catch a nice little sweep up here. And we'll take the first one off earlier this time. And it's about to get filled. Cool. We got it. Let's scoot that up, lock it in. I'll put a stop at 49.75. I'm long from 47.75. It's trading 52. I'm going to scoot that way up. This is a massive winner. This is why counter trend is my favorite. When you get a high volume reversal like I just got, you catch a real nice long. All right, that was a $20 one lot in the micros, guys. I picked up a $20 bill there. And, if you remember, I like to say that scalping is picking up $20 bills or $50 bills or $100 bills, depending on the instrument. Let's see if we can catch another fill down here. Because obviously the market is trying to hold this low. It may or may not, but it's a good scalp right now. It's asymmetric is the point. Let's get a little bit lower down there. I'm watching Mr. Liquidity here. See how he's coming up with that? He's reading this exactly the same way I am. And again, smart people read the tape the same way. No, but he's got a lot of money at risk. So I'm just assuming his algorithms and his tools are better than mine. That's all. You've heard me say that over and over again. Not an edge, but it's just a good barometer. If he's doing what you're doing and is doing it in roughly the same spots, then you're probably thinking correctly about the price action. All right, so like right now, along just at the break of 50 would be a good spot because you can see all this volume here. We built a high volume node and we're not going below it. So for now, there's a floor under the market, the high volume node. It's going to be really hard to get through there without a lot of selling. And it may happen, but I think it's susceptible to bounces, and that's why I want to get long when it does it. Hopefully that makes sense. Would I be long up here? No way, because this is the end of that move is over here. Would I short up here? Maybe. Yeah, if you're trying to continue to play the down move. Again, I would submit to you that I don't think we have yet a trend down day. NQ and RTY are just now getting over 1% down. And, if we do have a trend down day, they keep trying to buy the bottoms. So that's a tradable event. So either way, that's what's happening. Okay, you can see the liquidity guys are right above me. I'm trying to buy 49 again, but I'm probably not going to get an opportunity. I've got a bunch of orders down here to buy if we push down again. And it looks like it probably will. I think this high volume node is the place to play. So that's why I'm down there. But the end of it is that's the first spot right there that you want to buy. It's 52.25. And you can see now the liquidity guys are above me. And look how tight they're playing too. They're much closer to the inside bid and ask than they usually are. They're usually much farther away than that. And the way to interpret that is they're reading this the same way I am. That it's consolidating around there, but it could break in either direction. So now it's coming down to me. Let's see if we can get a fill down here at 52.25. Remember, the low is way below that. The last place I was buying was 44, so this could be way too early. But so far, it's right because we can't get down there. So, that's the way to read it. I'm going to leave my my footprint up here and just reset the current trades, which is the fast stuff. That way you can kind of see the momentum. And so it'd be really nice if it just touches the top of this high volume node and fills me and then goes up. That's kind of what, so I probably want to be a tick or two higher, like right there, right above 52.5, because that's the quarter, which is a little bit higher than the edge of the range. But, I'd rather lose another tick there and get a fill, because this looks like it does want to do what I think it's going to do. You know what else I would do? This one's at 49.75. I'm going to scoot that one up to 50.25, which is kind of the bottom end of the first bulge. So this is me waiting for the market to come to me in ES. This is how I trade NQ, but I'm doing it in ES today because of all the volatility. I'm saying, okay, I like this long. It's asymmetric. I'm right or I'm wrong if it fills down here pretty quickly. You saw when I was doing this shorting at the top, I was profitable immediately. The trade would go on and immediately go into profit. And that's what you look for when you're scalping. And this would have done it too. Look at this. It traded at 53, and I'm at 52.75, and we had a bounce to 57 on that. So I'm definitely in the right spot. I may be a tick too low, and that's okay. Because you want to get a good entry if you're going to do this. Okay, here it comes again. Let's see if we can catch 75. If not, we got it. Okay, perfect. So let's see if we can catch a quick, 2 points here. I'm not really going to look for a runner because the energy is going down here. So let's get that stop out of the way. Let's cancel this one. So now we're looking to add one more if the low holds. That's all. I think it's more likely we're going to come up here. So we'll take one off there maybe. You know what? I don't want that one anymore. I'm just going to play this with 2. This low looks like it's going to go is why. And there it goes. Okay. So now this is getting to be a bigger heat than I want, but it's kind of holding. Remember 44 was the number I liked. It's right there. It looks like it's going to go. Wow. It's really arguing here. This could go either way. So I might get stopped out, or I might add to this. Boy, my instinct is to add to this. I could be totally wrong, but I'm going to buy one more here. And then we'll just scoot these stops together. So, yes, it's getting bought, but they're not lifting it like they were before. So there's sellers in here too. Very tricky spot. But again, I'm mostly just having fun here. This is not a real good risk reward trade here. I'm just playing around, having some fun. I do that sometimes. It's not my monkey, because this idea is decent if it holds, but it's not going to hold. So I think we're going to get out of the way here. Gosh, it's really teasing me, isn't it? Nope, gone. Okay. So I flattened that one out, and let's see if, remember 44 was the line in the sand. It's taking that out. This is the time of day when I want to see what happens at the bottom of the hour. So let's just sit on our hands here for a while. We still have a nice profit. And although that last one took most of it back, we still have profit here. Yeah, see, now it's holding that spot again. I'm in it again. I think this is going to be a long down here, and there it goes. Okay, so boom. Now we got a nice winner, and we got a 2-lot on it. I'm long from 43. It's trading 46. Took first profits at 45. I'll lock the other one in at 45 also. And see if we can catch a runner. Nope. Okay, so that's a nice little scout. Made back some of what we lost on the last one. And you can see, your idea can be good, and you have to get out of the way, and then the idea is still good, and you come back in and do it again. These are really bad conditions, is my point. And so, if you can end the day, you don't trade it at all, or if you can play around the micros and end the day profitable, then it's a fun little exercise. That's how I'm treating it. Just so that makes sense. So we'll see if we can pick off a couple of 5-point moves here, and I'm about to get another one. Come on. Boom. Okay, we got 3. Let's see, that was 2.5. Anyway, so again, I still like this long, but I did have to stop out of the first try because I was too aggressive, too ambitious, too early. That happens. But again, look at this down here. Could the market be turning here? Yeah, maybe, maybe not. Again, this is. We're in B period, and we're headed. We took out the overnight low. So the question is now, does it have more to go? We have a passive buyer down there at the very low. That's interesting. Do you see that? Oh no, wow. Look at that big block. JVC, are you still here? I don't know if you are. Yeah, you are.
I am.
Yeah, look at that big negative delta right at the low.
At the low or
by
45?
What's that?
Okay. It's not huge, but yeah, I see it. Mm-hmm.
Yeah, it's not huge, but it's weird. And now we're upside down on the pullback. And we're at sellers that are in control with that minus 1,000 right here at 45. Now we're above it. So yeah, again, we just got run over. Yep, those guys got puked. And there's the puke. For those of you watching pukes, that was one right there. It was a puke of these guys. Here, I'll show you. This was a big chunk of passive selling right there, and we just puked that. You can see all the buying as that, what is it, 2,000 contracts or 1,000 contracts is getting puked out, or at least some percentage of it. That may not be all one trader or whatever, but that concept should be totally make sense to you now. If it doesn't, then go back and study the other videos when we talk about how those pukes work. Basically somebody gets off sides is what happens. So right now, again, I still like this long, but just because it hasn't really made a lot of damage going down, I think we're going to end up having a range day, which is really cool. As long as the internals are not getting worse, and they're not, they're kind of holding steady. Advanced decline is minus 900, which is the low of the day, but it's not pushing down, and that's still in the middle, unless it gets below about minus 1,200, minus 1,400, that's where it starts getting really negative. Cumulative tick is going down right here. In other words, if you add the ticks together for every 3 minutes or whatever, it's trending down. So, that's the selling we're seeing in the advanced decline as well, and in the downside volume. But, this is not an overwhelming amount compared to some of the previous days we've had, is my point. It's orderly at the moment. But what's making it difficult to trade are these two-way sweeps. We have a really nice range building. If this becomes the first hour low, this is a beautiful setup today, because we have a price rejector at the other end. You can see it up here on A period, and this is B period and the pullback of B period. So this low, if that holds, could be really interesting. This could be an outside in. I'd love for it to get back down there to get another attempt at getting long. That's my thesis right now. I'd love to buy the low again. It's asymmetric, it may go, but I don't think it's going to go a lot. And if it does, it'd be easy to get out of the way. So that's my trade theory at the moment is, can we get down here and hold it? We have to get down there. And, this high volume node is right now, the barrier, it's holding us. And that's why I liked 44 long before. And I may still like that, actually. Let's reset this again. It's trying to hold here. NQ is leading down a bit. You know what? I'm going to buy one more here. See if we can catch another quick scalp up to 46. That'll be a quick 2-pointer. It's pushing down. This is not my stop. Again, I'm going to get that out of the way. I'd like to add like maybe here. Again, I'm playing this low volume part of the high volume node. Does everyone see that? I'm assuming that we're roughly going to hold this or hold the bulge at the low. So I'm actually a tick too low there. There we go. And, it's been in profit. I've been in 4 ticks of profit. If I put this on 3, I'll fill instantly. See, if you go for 3 ticks, you can get it every single time. It's just when it's this volatile, only going for 3 ticks when I'm taking more risk is hard to do. So I tend to try to work into a little bit bigger position and go for, 6, 8, 10, 12 ticks when it's this volatile. But you can see that one. I would have got it on that one if I hadn't taken profit so fast. But I did that to demonstrate that 3 ticks always works, because it does. It's amazing how consistently that works in ES. You can scalp 3 ticks, but boy, if you try to push it to 4, your win rate will drop by 50%. And I have tested this 100 different times, a lot of different ways with myself. Video Game Guy tested it for me, and one of my hedge fund buddies tested it, and we all agree that if you have a 3-tick target, moving your target to 4 ticks is increasing your risk by 50%. That's a very interesting metric to think about if you're an ES trader. So let's see, Summer, I'm just reading your comment. Thank you. That makes my day. I'm just going to read this because it's so nice. Summer is such a sweetheart. I learned so much listening to you, read what you were seeing like this. Thank you for everything you do for us. You're a once-in-a-lifetime rare find. I mean that. Thank you. In this business, finding mentor like you is like hitting the jackpot. So you have no idea how grateful I am to have this opportunity. Thank you, Summer. You made my morning. That's why I do it. Cool. Andrew is up 42 ticks, hitting it out of the park. And he says, I'm right with 4 ticks. It keeps getting missed. Exactly. When I first observed that, I first observed that back when the algorithm age started. So about 2009 is when the idea of algorithms replaced the idea of program trades. for those of you that remember program trades back in the early 2000s, which was basically trading a basket of equities against the futures. That's what people did before algorithms. And anyway, now once algos came out, I started noticing that every time, because I used to shoot for 5 ticks. That was my target on most scalps, was 5. And I noticed my win rate just started dropping dramatically. This was like 2010, 2011. And so I said, you know, what the heck? So I started playing around with it, and I particularly watching, you know, overnight and whatnot when the algorithms were a little busier. And I started seeing that over and over again. I would not get filled at 3, at 5, or at 4, but at 3, I got filled all the time. And so I have my little database. I ran back, you know, analysis on it, and sure enough, you know, it struck me. And so then I went the other way, and I said, okay, what if on every one of the same trades, I had used 4 ticks? And literally that if you just, you know, extrapolate that against that same real-time trades you did, it comes back and it says 50% lower win rate, and it almost turns unprofitable. That's right on the edge. And so anyway, so again, I ran that. One of my hedge fund buddies who trades a really big book, I just said, you know, I know you can't tell me about your algorithms, but is that any part of it? He said, absolutely. Of course. You're not the only one that knows that pattern, Jeff. That's, you know, it's funny when these guys, you know, these are big, large dollar pros. And so they sometimes like to make fun of me when I ask what they consider to be a stupid question, but it isn't a stupid question from my point of view. So anyway, because I'm not trading 1,000 lot book, not today. You know, and also they use full margin. These guys, you know, don't, when they're calculating, they don't use day trade margins. So if you want to just figure out how much money that is, just, you know, the current margin is what, 10, 11,000 on ES. So, you know, if you've got 1,000 lot capability, that's a lot of money. Do the math. And that's discretionary, by the way. You know, those guys at those, they can put 1,000 lot on with discretion. Their bonus is based on how good they trade that. So. And again, you know, I've said this before, but just to review, hedge funds generally trade strategies that are very, very similar to ours. They're trading order flow, they're trading inflection points, they're, you know, trading ledge breaks, you know, the initial balance. They do very similar things to what we do, unlike the equity funds that are, you know, looking for value in the equities and then translating that to the futures. That's a totally different game. But the difference between the hedge funds and us is that they have better tools, they have more money, and they're smarter than we are. So that's why, you know, you have to really find unique edges in our game. And just something simple like that. You know, if you just realize that going for one more tick could ruin the success of that trade setup and adjust it accordingly, that could be the difference between being profitable or not. Right there, that one tiny little thing. And that's why, you know, you new people, stop worrying about learning everything. Get really good at one thing, one instrument, doing one good setup. You know, Bruce Lee, practice one kick 10,000 times, not 10,000 different kicks. Get focused. What works for you? We're having a session tomorrow, which I'm now teasing. It's on Bubba's. It's our round table, which is an open conversation with everybody in the room. It's as if we're sitting around in a round table and we're just talking. I usually start and lead it, and JVC and Lee will usually chime in, and I know Vosloo is going to contribute, or at least I hope he is. He had some good stuff about finding his Bubba. I'm sure we'll hear from Amy if she's available, and everybody else. The idea is just, you know, how did you find the thing that works for you first, and what have you done with it? And it's a good time. We were also going to do this a few months ago, and we had to postpone it. We were going to do a mid-year check-in. So at this point, we'll do the end-of-year check-in since it's December, and it's a good time to do that Bubba conversation. So make sure you got that on your calendar. It's tomorrow morning, 9 o'clock. Is that correct, JVC? I think it is.
I believe so. Let me double check. It is 9 a.m. Pacific, yes.
Yeah, okay, cool. Yeah, anyway. Is Video Game Guy able to trade the NQ when it's like this? Yes, absolutely, Dave. And the reason is because he totally focuses on inflection points. He doesn't use price at all. He's only on a dome. He does not have any charts of any kind. So he's literally just looking at this. Here, I'll show you how it works. This is what Video Game Guy is looking at and how he does it. And it's really fun to watch. He won't let me videotape him or record him, but I've watched him a number of times. That's how he trades. He's just watching the NQ. He's looking for inflection points, and if there's an area where there's liquidity, like it's coming down to, and the liquidity keeps moving down, you see it down here at 60 now. If it comes down to an area of liquidity, like it just did at 60, and the trade volume picks up, the LTQ picks up, he would have entered right there long, and he probably would have exited at 64. So it just tapped 64 3 or 4 times. So that's a classic video game guy trade. That would have had an MAE of 1 tick had you done that one right there. But you really got to pay attention to see it. Once you can see it, it's really obvious. You're watching the book filling up or pulling, the pulling and stacking, which is being summarized right here. That's what that is. And you're looking for the LTQ, the volume in the middle, which is the last trades at those price. If the volume goes up suddenly at a price, then there's lots of action there. And if you can do that and coincide with when the book's filling up, then you're catching a sweet spot for an entry. That's how he keeps his MAE so low. And the market volatility has picked up, and his MAE went up with it, but his current MAE right now is 5 for the month of November, trading NQ, and that's ridiculously good. I'm happy if I can keep mine below 10. Good NQ traders and good CL traders can keep it below 5 over time, and he does. I've seen his as low as 2 for a month, but not under these conditions. This is pretty crazy conditions. So anyway, that's what he does. Hope that answered your question. Dave? Yep. Okay, 51 ticks now. Awesome. 7 tick ME. So Andrew's giving me here, I'll just copy it and paste it for you guys. Andrew just gave me a little summary of his morning, and obviously he's becoming a decent little scalper here because this is how he did. I'll post it. Look at the chat. There it is. So that's from Andrew. Good morning, John. Remember, when you have a good day like this going, Andrew, it's really easy to get complacent or cocky. So start getting more risk averse as the day goes on is the way that I keep myself out of doing that, particularly when I'm having a really good day like you're having. So I'm going to put these guys back up. Put my charts back up because I can't see things as clearly that quickly on a dome as video game guy. I can see it, but the chart, the 15-second view for me. Well, for example, he would have just taken that long off 60. It's right there, and you can see. I described that one right there as it happened, as it came in, consolidated, the book fill up, and then boom, we took off. So that's a perfect example at the edge of the range for a long. Go back and look at the recording, slow it down, or stop it and look at what I was looking at right there at 60 where that long would have been, and now we're at 95. So, that's the key to NQ. You got to get the entry at the right spot when the book is filling up and the volume is increasing at an inflection point. That's the sweet spot to enter NQ. Okay. Oh, absolutely. Amy said, be satisfied with small wins. They really add up. Yeah, I have one $80 loser, that one that we just saw in MES, and a whole bunch of $10 and $20 winners, and it's profitable right now. So, I gave some of it back on that one loser, but that's the idea. If you execute well consistently over time, your equity goes up. Okay, this is actually looking like a potential short right now, so I'm going to watch this really closely. I hesitated for a second, but it definitely was a short. Let's see if we can get, boom, we got 5 ticks, not even 3. But see, I just did the same thing here. I saw an inflection point. I saw the book fill up. The trade quantity, the LTQ picked way up right here, and we started to go down. I didn't get to the sell market button fast enough. I would have done a little better on that one if I had, but that was still a really sweet scalp. I don't know if I want these down here, these longs again. Let's watch. It's coming down there anyway, so maybe we'll see if we get them. I've got orders at 42 quarter to play 42.5, and another one down at the low. Let's cancel that one. This one's a good idea if that bottom of the high volume node right there holds. But I'm going to short bounces again as opposed to buying dips, except for that one setup. But that'll kind of be it. Is the low going to hold or not? And right now it looks like it's not. It's coming down pretty strongly, but let's see if we get a fill down there. We're certainly at the mercy of algorithms today. The volume is low. We're only at 780,000, and we're sweeping all over the place. And that's ES algorithms that are doing most of that. As I said, the way these desks work, they see something they want to do, like buy the bottom of the range or whatever, and they'll turn on an algorithm that executes against that. So in that sense, they're automated traders. But the discretion is deciding which algorithm to play at what points. So still discretionary trading. And what would an algorithm like that look like? Oh, it might, let's say we get down to, let's say they're trying to buy where I am at 42 quarter. They might sell small quantities below 47 and 46 and 45 to try to push it down a bit while they're buying underneath that. That might be one way you see an algorithm doing that. And it would occur over 3, 4, 5 ticks. It wouldn't be much farther than that. You might see it sweep into a buy point. Like right now, there's a decent buy point down here at 46, 47-ish, right at the bottom of the high volume node. A sweep down to there that suddenly increases in volume like it did the last one is a really good, jump in long. Because again, you're catching an inflection point live. But right now, I don't like either direction right now. Actually, I'm going to cancel that buy down there that I had. It's gone. We're settling into value. And if we can just get rid of the sweeps, then we can go up to ES and scalp with size. But the sweeps would kill that. I mean, I'd love to do, 5, 10 lot ES, 3 tick drills here. But boy, when you have an 8 tick, 9 tick, 10 tick sweep against you, that would be really ugly, really fast, even though, it's pretty predictable as long as the sweeps don't hit, This trading range is settling down. See the 15-second here? We're settling into a really nice little range. And that's when I start thinking about scalping with more size. But as long as we're seeing, 4, 6 point or bigger or tick sweeps, I'm just not going to play. All right, we're almost at 7:30. I think I'm going to start to wrap this up. I've been going for like 2.5 hours now. So there's definitely lots of opportunity, but I'm not committed to either direction. Tell you what, let's go ahead and clear the bottom of the hour and see what happens for the initial balance trade, and then we'll wrap it up. So that's the plan. If you have any questions or comments, stick them in the chat. I will get to them if I can. Maybe along into that potential price rejector in the pullback. Absolutely. Any of those ideas are good. The trick to any of those ideas, Lance, is going to be managing the risk around them. Like right here, this is just too much the top of the volume profile for me to really want to get long here. It's also the top of the range. But if it gets going, it could be a really sweet long. Another 10 points easily. So watch NQ and watch RTY. I might join this long. I just did. Let's see if we can catch a better entry here. Yeah, as long as it doesn't pull back by more than 3 or 4 ticks, I've got the right idea. And I still can't get the other one. There we go. Okay, now we got the other ones. Let's see if we can take off. Oh, right under 60 is a really sweet spot for the first one, and then 62.25 is the other one. Yeah, the supposition this top of the range is going to go is pretty good. I think it will, but let's reset the footprint so we can see fresh data on that. Looking for lifts. There's looking for a lift, and there's a 7-tick one. So we're on the right side of the tape, folks. But again, if there's down sweeps, then we're going to be at risk. So I'm going to take the first one off with 3 ticks, going to protect the rest and see if we can catch a runner. And looks like we do. Ooh, beautiful. Okay, so I'm long from 57.75. It's trading 62.25. That's the place I was originally going to exit. I'm going to see if I get a runner here, but I've got a really nice profit. I'm going to lock it in. Boom. Okay, 4 points, 20 ticks. That's how you do it. Any questions, any comments, anything I can help you with before I wrap up? I'm going to, burning desires, if you will, but I want to see how the next, we're literally right now at the beginning of C period. So let's see what happens, but this is the last thing I'm going to do. So if you have anything you want to say, get it in the chat. I'll address it shortly. Okay, here's the push down. I really would love to still buy the low here. The low of the range, in other words. So yeah, 59 at the moment, maybe as low as 40 is the initial balance low now. So yeah, somewhere between 54 and 40 looks very interesting. And we're right at 54 right now. So it's trading down. Let's let it go. 50, there's some liquidity right there. That's the POC. Not that that means anything. I don't really care about POCs, but it's just a reference point. High volume node, in other words. If we can take out this liquidity, he'll puke. If not, we want to go with him and get long. I'm going to go on the he's right side of the coin. See if we can catch some ticks to the upside here. He's right there at 50. If he pukes, it's going to go down really hard. So just be aware that's a risk here. But at the moment, it looks like he's not the only guy buying. So, okay, there's our long. Boom, 6 ticks again. Wash, rinse, repeat. Any questions? Okay, Robert, today's session's been very insightful. Thank you, thank you. I can't tell you how much I like getting feedback, good or bad, because at least tells me, if what I'm teaching you guys is landing. So thank you. I really, really do appreciate it. I'm just reading your comment, Amy. Amy's got a new horse. Awesome. Brought it down from New York. That's cool. My friend Sue is leasing a horse now so she can ride it whenever she wants. Yes, please do jump in the Bubba discussion tomorrow, Amy. I would definitely want you to be there. Your contributions are excellent in those sessions. Summer says, as soon as you said you were looking for a lift, I got filled profit long on that scalp. Hit 3 targets in my combine, 61 points MNQ live. Surreal feeling, seeing results you can be proud of. No, that shouldn't be surreal. It should be, hey, all the hard work's paying off. Stay on that course, without your ego getting in the way, and be proud and understand there's going to be other days when it's going to work the other way and you're going to get beat up. And at least now that when you're doing it right, you make money. And remember, there's 3 steps to this process. Number 1, you have to identify a Bubba that works for you. There are no tools you can buy or trading systems that will make you money. You have to find an edge, and it has to be unique to you, but it has to be a legitimate edge. And there's certainly plenty of them that we talk about all the time in TRG. So pick one: ledge breaks, B to A, A to overnight, whatever. Find yourself a Bubba. That's what we're talking about tomorrow. That's step 1. Once you have it and you start playing with it and practicing in sims or evals, you will get to step 2, which is kind of, JVC just passed step 2. I think there's a bunch of people in step 2 right now in TRG. And that step is where they say, okay, I realized that if I did this consistently well, I could make money doing this. I see my Bubba, I know it works. And I realize that the only weakness in the equation right now is me, my ability to execute, and my discipline, and my not stupid monkey. And so once you get to that phase, it's all about practice. And that's where we all see JVC successfully growing his accounts and practicing and opening new funded accounts now. But that's a long road. JVC's been around for 2 years, and he was, around the markets for 30 years before that. So
a long road worth traveling.
It is, but you really got to understand that the first step is you have to find a legitimate edge. And the MACD crossover is not a legitimate edge.
No?
Yeah. And just buying or selling the edge of the range isn't either. You saw me doing some of that, but I'm qualifying it. It's not just long at the bottom, short at the top. I went back and forth a couple of times, but, I was shorting the bottom a while, right? So that's the point. But once you have a legitimate edge, a legitimate playbook, and you guys have seen mine, I have about 8 setups I trade regularly, and really 2 or 3 that I focus on. And, that's just discipline. And in my case, because of my health issues and my age, sometimes I'll go a week or 2 of mistakes, but I don't get discouraged because I know I'm better than that. I know that the reason I'm not making money, or I lost a little money, was because I just wasn't executing well. My back hurt, my neck hurt, I didn't sleep, whatever. But again, that's a really powerful feeling because you always have that skill. You can always make money anywhere. You just need a computer and an internet connection, and you can sit down and pull money out of the market. And I got to tell you, that is the most liberating feeling there is as a human being, to have no connection to you. Nobody else matters. You are in control of your destiny. Go ahead, JVC.
I will totally agree with that. I've recently, like in the last month or so, had that sensation hit where it's just, it doesn't matter what happens in any given day. It doesn't faze me because I no longer have any doubts whatsoever that I know what I'm doing, and I know exactly what I'm looking for, and I know what I need to do, and I just need to go do it. That's all. It's not a big deal.
And to contrast that between your crypto experience, you make $1 million in crypto. I know you did, but it's luck. It's you can't consistently day in, day out do the same thing.
Yeah. Well, and I made it, and it was on paper, and I watched it go away.
Yeah, that too. Well, again, because those markets just are not predictable. They're very erratic. And even our market can get erratic. You saw that this morning. But even within the erraticness of ES and of the indexes this morning, there was logic. There was form to it. There were tradable patterns. And that's always what it's about. Finding good tradable patterns that execute against probabilities that you're aware of. Like 100%, 99% chance ledge breaks are going to go. That's a really good one. To play them either way, buy them when they go or trade them on the way. And when they break, you go with them. Either way. Both, obviously today, both of those are working really well because I've done a few both directions and I've been long off the low, which I would love to be right now because there it goes again. That's a really good strategy. It's just focus. If you're going to do that, focus on which way are we going, up or down, and with how much energy right now? That's question number 1. Question number 2, how's it changing? That's it. That's the art of what I do scalping. And when I'm tuned in, I can do it really well. When I feel crappy, I don't do it quite as well, but it always works. If I'm watching it carefully, it always works. Just, sometimes I'm better at doing it than others. But I'll tell you this is true. Somebody asked me about this privately, and I said I would share it publicly. I've been asked this a few times in a few different ways, but am I better or worse at this as I've gotten older? What's realistic for somebody at different age points? I used to be able to scalp all day when I was in my early 40s. I would do what I'm doing now and be able to do it for 6 hours. I can't do that now. And also what I'm looking at is more precise. So it's more mentally taxing, even if I weren't older. So I think a really good idea is, like what I was saying to Andrew, put some money in the bank at the open and then take a break and then come back after it's, the rookie roast settled down. It might be a good range trade, but, never risk your opening money you've made, just by continuing to trade, because conditions change as the day goes on and you kind of have to be sensitive to that. And the best way to be sensitive to it is to get up and walk away and come back and see if it still looks interesting. So with that, I'm going to wrap this session up because it's starting to do that now. It's going into the kind of initial balance consolidation. The first hour low held. It got broken just barely. So we've satisfied the one side broke. It broke in C period. It only broke by a few ticks. And then we immediately came back into the range. So this is very, 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 very likely to be a range day. And that's wonderful because in a couple hours, it's going to be really scalpable with size. So come back for the closing session. I may start that early because I'm probably going to trade from a little earlier to scalp that behavior. So, but it will definitely start by noon my time. So we'll see you then. Any other final questions or comments? Awesome, Andrew. Good job. VWAP is the answer. Exactly, Lance. He says in jest. Do I still have sleep issues? Yes, I do. But I know how to manage them. My sleep issues are mostly pain related. And I have all kinds of good apps and heaters and fancy beds and massagers. And yeah, it's, I would, if I was pain free, I'd have no sleep problems. But yeah, chronic pain is a killer, particularly as you get older. It's just brutal. I mean, I wake up 3-4 times a night and I'll drink a cup of coffee and just move around for an hour just to get out of pain. And then I go back to bed. Yeah, my room is completely blacked out, Lance. I have blackout shades on all the windows I sleep in, and heaters and coolers. I can control it. I can keep it cool. I can warm it up. I have meditation music that plays. I have sleep headphones that I wear that are like a headband. I am a scientist when it comes to the management of sleep.
I have most of that same stuff. That's so
yeah,
cool.
I know. You and I do exactly a lot of the same things. Yeah, I don't do tea. I use coffee with milk, Lance, because a coffee with milk in it will wake me up for about 45 minutes or an hour, and then I can go right back to sleep. Because milk has, lactose and a couple of amino acids in it that make you sleepy. That's why. I also put chocolate in warm cocoa coffee. I make a blend of cocoa and coffee, as I've told you guys. So anyway, any other last minute questions, comments? I think this was a great little session. We saw some good examples. You saw, when I'm wrong and I get out of the way and lose a little money and then can make it, it's just about the odds. That's all it is. Yeah, Irish coffee works too. I don't drink much anymore, Amy, because my body just doesn't metabolize liquor. I love wine and craft beer. I used to drink it more, but now I'll have 2 beers at night and like for 2 days, I feel weird, I know a lot of people as they age, that starts to happen. Your body just can't metabolize as quickly. Yeah, exactly. So, but boy, I love a good craft beer. When I was up in the Pacific Northwest, some of my favorites are up there. Deschutes Fresh Squeeze. I love citrus IPAs. That's my sweet spot. Anyway, all right, guys, let's wrap it up. It's now, we're right back at this 44 level that I keep telling you I really like long. And so, I'm going to start scalping with some scale in a little while, but I may even do one right now. Hang on. I really like this spot. Couldn't get long. Got it. Okay. Let's see. And we got another winner. Okay. I mean, you can do this all day when you get good at reading the rhythm. I just took another 3 and 6 ticks on a 2 lot in the micros, and I'm going to switch to the minis now that it's calmed down and because I'm done teaching. So anyway, have a good day. We'll see you at the close. I will be here unless something comes up, in which case I'll post it, but I'm really likely to trade the close today because I really think we're going to have a good one. So good time to take a break, get a rest, go for a walk, and we'll see you guys then.